add to a sense of optimism in the city overall in terms of the economic reopening that we are seeing mostly peaceful protests in the city, and the tensions are starting to die down a bit in that regard? Talk about the overall feeling now that we are heading into this phase one.
It's that complicated moment of I think you can feel more confidence in the city, and you can feel people itching to get back. But on the other hand, I'm pretty sure if I had to try to overgeneralize what we had heard on the street, I'm not so sure that the excitement and the confidence necessarily has to do with the tenor of the protest. I think that there's a lot to say about the fact that for the first time ever in a single day here in New York City, coronavirus deaths, confirmed coronavirus deaths, fell below double digits. I mean, I would say that has got to be the biggest thing. That only a few weeks ago, it was terrifying to think that a public health crisis was rampaging throughout the city, impacting not just Manhattan, but Bronx and Queens, and hitting communities of color and poor people especially hard. And, we remember when we saw those refrigerated trucks outside of hospitals? Yeah. I mean, it really felt like something out of a bad sci-fi movie. I mean, it was really, really unsettling. And that does seem to be getting better. And again, no one fully knows what's going to happen. But I would say the combination of the public health crisis seeming to wane, plus a feeling of sort of, the sense that people need to get back to work and want to get back to work, and then a sense of joy in the streets of throughout these peaceful protests combined for a moment where there's definitely not a pain, but I think there's also some hope too.
Yeah, so there's optimism there, but, anybody who walks around the streets of New York City, particularly downtown into Midtown, knows how crowded it gets on the sidewalk. And, we still hear about that need to maintain social distancing. I wonder how that's going to complicate the reopening, particularly in a city that has been hit the hardest by this pandemic.
I think that New York City is not going to get back to business as we had known it a few months ago. I really miss being at Bloomberg News, and I don't say that because to somehow suck up to our company. I miss being around my colleagues and my friends. I miss walking through a room of people, a room of my fellow journalists who do what I do and love to report and be on the phone, and the sort of the din of being around other people. I really miss, and I worry, and I think it's only fair to tell people that it's not as if we're going to leap back like someone snapping their fingers into the world as we've known it. I mean, I think that in the same way, to return to your first question about this only being phase one, I think this reopening series is going to take a long time. But that's actually one reason why I'm excited about the Bloomberg News series. It's called NYC Reopens. This kicked it off. Michael Sang is editing it, and David Papadopoulos as well. And we are going to be following, as journalists, what it looks like when New York begins to change. I mean, the one thing that I feel certain of is that no one knows what's going to happen. And if I had to guess about a second thing, it would be that we're not going to simply go back to the way things were. The economic impact and the psychological impact and the ramifications of so much death and destruction means that things are really going to be different.
Right. Max Abelson, Bloomberg News reporter, thanks so much for joining us on this first day of the Phase 1 reopening in New York City. And again, NYC Reopens. It'll be a series that is updated regularly on Bloomberg.com and on the Bloomberg terminal. On this first day of the reopening of New York City, futures are moving higher. S&P futures up 11 points. Dow futures ahead by 135. You're listening to Bloomberg Daybreak.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
It's not business as usual right now, but Square has tools to help your business adapt. Like Square Online Store. You can start selling online in a few easy steps with pickup, delivery, and shipping options. And if you are selling in person, you can take contactless payments with hardware like Square Reader and Square Terminal. You'll get your money the very next business day, so you can put it to work. All these Square tools work together, no matter where you're selling, and there's never hidden fees or long-term commitments. Find out how Square can help you get back to business by visiting square.com/UK. Square Up Europe Limited is regulated by the Financial Conduct Authority for the provision of payment services.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studios, this is Bloomberg Daybreak for Monday, June 8th, 2020. Coming up this hour.
A weekend of peaceful protests goes global as cities across the country end curfews.
New York City enters phase one with as many as 400,000 people returning to work.
And talks get started on what could be the biggest deal ever in the pharmaceutical industry.
New York's mayor announces police reforms as New York's governor has advice for protesters' health. I'm Amy Morris. More ahead.
I'm John Stashower in sports. What do the Knicks do when other NBA teams are playing? In a presidential tweet aimed at NFL Commissioner Roger Goodell.
That's all straight ahead on Bloomberg Daybreak. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning, I'm Karen Moscow.
And I'm Nathan Hager. Bloomberg Daybreak is brought to you by SEI. Crises and challenges highlight the power of partnership and character. Work for the common good. One community, SEI. Go to SEIC.com/banks.
And U.S. futures are gaining to start the week. It is 6:01 on Wall Street, and we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 12 points, Dow futures up 144, Nasdaq futures up 6. The DAX in Germany is down 0.5%, CAC in Paris down 0.4%, and the FTSE 100 is higher, up 0.2%. Nikkei 225 in Japan jumped to 1.4%, and the Hang Seng in Hong Kong little changed. 10-year Treasury down 4/30 seconds, yield 0.90%. The yield on the 2-year 0.21%. COMEX gold is up 1% or $16.20 at $16.9920 an ounce. The euro 1.1294 against the dollar. The yen 109.44. Nathan.
Karen, it was a weekend of peaceful protests with rallies across the country from New York to Los Angeles, drawing little to no violence. Demonstrators lined the streets in New York with peaceful gatherings leading Mayor Bill de Blasio to end the city's curfew a day early.
And honestly, I hope it's the last time we will ever need a curfew in New York City.
And streets were packed in our nation's capital. Protesters marched peacefully in Washington. Mitt Romney was among them, making him the first known Republican senator to join their ranks. After several days with no violence, President Trump ordered the National Guard to leave D.C. That was the sound of demonstrations in London as rallies went global. The weekend saw protests sweep into France, Spain, Hong Kong, and several other countries. Overall, the weekend saw relatively few arrests, while Chicago joined New York in ending its curfew.
Now New York's mayor turns his attention to another major moment.
The beginning of phase one, the restart of the city, the restart of our economy, the restart of people's livelihoods.
Starting today, some non-essential retailers can open their doors. Others will be limited to delivery and curbside pickup. New York Governor Andrew Cuomo.
You watch the gauges, and if the gauges are staying down low, then you can open the valve more.
Restaurant dining remains closed for now. That will ease in phase 2 with outdoor seating at most establishments.
Now, as the city reopens, many shops are facing uncertainty over exactly what business will look like. We get more from Bloomberg's John Tucker in New York.
Well, Nathan and Karen, one thing that's certain is uncertainty. The question is, will people shop? Frank Vellucci operates fast casual restaurant Sweet Catch Poke, which has already been doing curbside pickup.
Our business is predicated on office building workers. All our locations are right near large office buildings in Manhattan.
Ashwin Deshmukh is still waiting on rules for opening his cocktail bar, Short Stories.
It might be just impossible for small bars and restaurants like ours to survive.
Many retailers in New York City are also still reeling from looting and vandalism. Boarded up shops in the city show many aren't even attempting to open today. In New York, I'm John Tucker, Bloomberg Daybreak.
All right, John, thank you. As many as 400,000 New Yorkers could board buses and subways to head back to work today. That is mass transit increasing its schedule by reversing cuts made at the start of the pandemic. We spoke with New York Lieutenant Governor Kathy Hochul about cautionary measures being put into place.
Our subways, they have been sanitized top to bottom by individuals that have just been working fully through the night. So we're going to continue those processes. We're going to add more trains. We know that there'll be increased capacity, but people are going to be anxious.
To help ease that anxiety, there'll be social distancing markers on subway platforms and hand sanitizing stations throughout the system. While the city starts phase 1, New York's mid-Hudson Valley region enters phase 2 tomorrow. Long Island starts its second phase Wednesday.
Massachusetts enters phase 2 today, allowing a large range of businesses in the state to open their doors. Here with details is Bloomberg's Denise Pellegrini.
Outdoor restaurant service, in-store retail shopping, and sleeping in hotels are among the things allowed again in Massachusetts as of today. And summer camps and child care centers can also open. Governor Charlie Baker is calling today's phase 2 reopening the cautious phase, with many rules on social distancing still in place.
In a world where COVID-19 exists, everything looks a little different.
The governor says the next step is phase 3, the vigilance stage, followed by phase 4, the new normal. Denise Pellegrini, Bloomberg Daybreak.
All right, Denise, thank you. Turning to corporate news now, 2 of the biggest drug companies in the fight against COVID-19 could be looking to team up permanently. Bloomberg News has learned that AstraZeneca has made a preliminary takeover approach to Gilead Sciences. Here with more on the possible tie-up is Bloomberg's Aaron Kirchfield in London.
In this industry, it really is eat or be eaten. And so the rationale would be it's all about R&D pipeline and investments. It costs a lot of money to develop drugs and get them on the market. Gilead has a good track record in terms of HIV treatment and other pipeline drugs. So if you were thinking beyond COVID and strengthening yourself, this might be a transformational deal that brings you to the front of the big guys and gives you a very strong pipeline and R&D budget.
AstraZeneca's approach is only preliminary. A combination with Gilead would be the biggest deal ever in the pharmaceutical industry. Right now, shares of AstraZeneca are down 2% in London. Gilead is up 3% in early trading.
And oil is gaining this morning after OPEC and its allies agreed to extend output cuts. A 1-month extension promises stricter compliance to ensure members don't pump more than pledged. At the same time, Saudi Arabia is making some of the biggest price increases in 2 decades. And that has Brent crude up 1% or 42 cents at $42.72 a barrel. West Texas Intermediate crude is up 0.8% or 32 cents at $39.87. U.S. equity futures are moving higher this morning. Straight ahead, the latest world and national news. This is Bloomberg. At 6:07 on Wall Street, Amy Morris has more on what's going on around the world. Good morning, Amy.
Morning, Nathan. New York Mayor Bill de Blasio is announcing new police reforms, including shifting NYPD funding. He says the city must address the issue of officer accountability and that several officers have been suspended in connection with incidents during the protests this past week.
There are more investigations underway, both within the NYPD and then the independent review being done.
Prosecutors say 2 Buffalo police officers have been charged with assault after that video showing them shoving a 75-year-old protester. That man falling backwards, cracking his head on the concrete. The police walk past as the blood pools around his head. Both officers pleaded not guilty to second-degree assault and have been suspended without pay. The governor praised prosecutors for moving quickly to charge the officers. A majority of the members of the Minneapolis City Council say they support disbanding the city's police department. Councilman Stephen Fletcher.
It's not that we're dismantling a system that was working. We're dismantling a system that actually wasn't working very well for us and seeing if we can design something better, and I believe we can.
It is an aggressive stance that comes just as the state has launched a civil rights investigation after George Floyd's death. They've already banned the use of chokeholds and neck restraints. And we're watching Congress for a broad police reform bill expected to be released later today as lawmakers look to turn the energy of the nationwide Black Lives Matter protests into concrete legal changes that could make it easier to prosecute police misconduct. A draft version of the Justice in Policing Act curtails qualified immunity for police and would allow for more civil lawsuits. This as New York Governor Andrew Cuomo once again expressed his concerns the massive protest crowds will lead to a new spread of the coronavirus, and he has advice for protesters.
My opinion, not a fact, I would act as if you were exposed, and I would tell people who I'm interacting with, assume I am positive for the virus, because you could be infecting other people.
Outdoor graduation ceremonies with up to 150 people will be allowed in New York as more restrictions are lifted. High schools can start planning socially distanced graduations starting June 26th. Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg, Nathan.
Okay, Amy, thanks. 6:09 on Wall Street. Time for the Bloomberg Sports Update. Good morning, John Stashow.
Good morning, Nathan. The issue of NFL players kneeling during the national anthem had pretty much gone away, but then George Floyd, the protest, the Drew Brees controversy last week, and Adrian Peterson just said he absolutely intends to kneel this season. That has made President Trump wonder if all players are going to kneel and whether they will have the blessing of NFL Commissioner Roger Goodell, who said this the other day.
We, the National Football League, condemn racism and the systematic oppression of black people. We, the National Football League, admit we were wrong for not listening to NFL players earlier and encourage all to speak out and peacefully protest. We, the National Football League, believe Black Lives Matter.
The president tweeted late last night, is it possible Goodell is intimating it would now be okay for players to kneel, disrespecting our flag and our country. 22 NBA teams head to Orlando next month to start resuming the season. So what do the Knicks and 7 other teams do? The thought was players from those teams could be assured of staying safe from the virus by not playing, but do teams want their players to go 9 months without playing a game? There's now talk of joint practices, summer camps, and fall exhibition games. The Nets will resume their season. Those last games will determine if they get into the playoffs. They'll battle in Orlando and Washington for 2 spots. The odds on the Nets winning the NBA championship dropped from 750 to 1 down to 60 to 1 amid speculation Kevin Durant might return from his leg injury. But Durant just made it clear he's not going to play. He'll wait until next season. John Stashower, Bloomberg Sports. Nathan?
All right, John, thanks. And now it's our weekly look at what would have been if the sports world weren't shut down. For the first time in 7 decades, there is no college baseball in Omaha this summer. The College World Series was scheduled to begin there this week. London was calling for Major League Baseball. The Cubs and Cardinals were planning to travel about 4,000 miles to play in Europe right around this time. And we would have been in the thick of the NBA and NHL finals, but for the coronavirus. S&P futures higher by 12 points. Dow futures up 153. NASDAQ futures a gain of 6 points. You're listening to Bloomberg Daybreak.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
as very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a...
We're Cadent. Keeping you and our people safe is our main focus, and our vital work must continue. You'll start to see more of us in your area as we increase our work to upgrade the gas pipes to keep the energy flowing into your homes and businesses. We may need to come into your home to complete this work, but rest assured our engineers are following all government guidance on PPE and social distancing. We continue to provide the critical gas emergency service, and if you smell gas, call 0800 111 999. To all other key workers, we would like to say a big thank you from everyone at Cadent. Cadent, your gas network.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
At Wix, we put customer safety at the heart of everything we do. But right now, that doesn't just mean goggles, steel toe caps, and yellow helmets. It means 2-meter distances, paying by card, and safety screens at checkout. So whether you want to shop with us in-store, click and collect, or have your order delivered to your home, let's do it right safely. Wix.
From Bloomberg Television, here's Manus Crenny.
Rania Al-Mashad is the Egyptian Minister for International Cooperation. This standby agreement with the IMF, it's a good news, a good signal. What does it signal to the world about bringing funds to Egypt?
I would like to say that it's not just that we are focusing on the immediate impacts of COVID, but we're actually looking forward. And that is very important because countries post-COVID are going to be distinguished by how much effort they put in trying to implement structural reforms that help put the economy on a path for more employment and more inclusive growth. So this is something that we have been able to do pre-COVID. We had concluded the a very successful reform program by summer of 2019, and that has allowed us to enter into this crisis with a very good fiscal as well as foreign exchange position. And the government during the crisis has taken very important steps and policies, both on the monetary side, the fiscal side, but also more importantly, when it comes to structural reforms related to widening the social safety net. And what we want to do going forward is build on that in order to help not just rebuild the economy, but really reshape it.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures on the rise. European stocks paring their declines a bit as investors mull over how much further to take the global rally and risk assets. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 11 points this morning. Dow futures up 134. NASDAQ futures up 3. The DAX in Germany's down 0.5%. 10-year Treasury down 430 seconds, yield 0.90%. The yield on the 2-year 0.21%. NYMEX crude oil is up about 0.8%, up 30 cents at $39.85 a barrel. COMEX gold is up 0.9%, or $15.10 at $16.98.10 an ounce. The euro 1.1288 against the dollar. British pound 1.2655. And the yen is at 109.35. And PG&E expects to pursue $5.75 billion underwritten public offerings of common stock and equity units to partially fund its emergence from Chapter 11. That's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Thank you, Karen. Congressional Democrats are coming out with legislation to overhaul police accountability. Their package is expected today. It's in response to mass protests nationwide over the death of George Floyd and other black Americans during interactions with law enforcement. Utah Senator Mitt Romney, marching with an evangelical group, is the first known Republican senator to join the protests in the district on the District of Columbia. On Saturday, Romney tweeted a photo of his father. Now, he was the governor of Michigan in the 1960s, marching with civil rights protesters in a Detroit suburb. While federal prosecutors are trying to dismiss their case against former National Security Advisor Michael Flynn, they're also trying to get their conviction against his one-time business partner reinstated. Prosecutors want to reinstate the conviction against Bijan Kian, who was convicted last year of acting as an unregistered foreign agent of Turkey. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
All right, Amy, thanks. It's 6:19 on Wall Street. Live from the Bloomberg Interactive Brokers Studios, this is Bloomberg Daybreak, and John Sylvia is with us now, founder and economist at Dynamic Economic Strategy. Well, John, we've had a weekend to think through the May jobs report. What do you think happened? Why did so many economists get it wrong?
I think many people were not anticipating the reopening having such a significant impact and people being brought back. I think the program that was put in place allowing for payment to workers and therefore having this temporary furlough program actually worked out pretty well. We had people who didn't have jobs, had income, and now were being called back, and they went back to work. And there was some comment, Nathan, that many of these workers may stay out for a longer period of time. I think that right now it doesn't look like that. I think as we see over the next 2 or 3 months, a lot more people will be coming back from their furlough.
So are you starting to rethink what your forecast is for future growth for the rest of this year?
Absolutely. I think that you're probably going to see, I am not a believer in V-shaped recovery. If you look at the recoveries in 2001, 2, and in 2009, 10, 11, none of those were V-shaped recoveries. Employment and industrial production took probably 2 or 3 years to come back. But clearly, I think that the shutdown was really the story here. It was much more than the virus. It was the shutdown in America that really led to such significant job losses. I suspect, Nathan, that yes, I revised up my numbers. I'm looking for a still 7% unemployment rate by the end of 2021. So we got a long way to go here, and it's definitely not a V-shaped recovery for workers.
So does that point to the need for continued monetary support from the Federal Reserve?
I think that's definitely what you're going to get, Nathan. This Fed is in a position now where they are concerned that raising interest rates in an environment where you have a lot of delinquencies on autos and homes, you're going to really weaken the housing recovery. You look at the durable goods orders numbers, Nathan, and there really isn't a lot of interest in business investment. I think the Fed's probably here, from my point of view, until at least the middle of 2021.
Do you think Chairman Powell's going to signal specific policy prescriptions at the meeting on Wednesday?
No, I think he's going to say we're going to continue the current policy. Nathan, no matter what we saw in the employment number on Friday, we still have a recession. We still have an incredibly sensitive economy to changes in consumer confidence and business confidence. I don't think he wants to shake that confidence at all.
What do you make of the signals we're getting from the bond market? Some pretty steep yields, particularly the 2- and 10-year curve is really steep. What does that tell you?
It tells me optimism. For me, a rising 10-year, 2-year rising yield curve, traditionally in economics, has always been a signal of economic strength and recovery. And so what I'm seeing here is people expect better growth ahead, and I think that they're willing to move from bond market sovereign debt, U.S. Treasuries, to corporate debt, and that's consistent with the narrower yields spreads you see between high yield and high grade bonds and treasuries.
Do you have any concerns about stagflation?
No, not at all. I think when you look at the inflation numbers, what you have here, Nathan, is continued inflation numbers below the Fed's 2%. Now, the stag is definitely there. I mean, you have to believe that looking at these numbers, some of these sectors are going to have 2-3 year workouts. But that, again, is consistent with what we've seen before with the Rust Belt in the 1980s, the dot-com era. We saw that in housing for 2 or 3 years. Consistent with every economic shock and recession, there are some sectors that continue to lag. And my suspicion is when you're looking at leisure and hospitality and you're looking at retail, you're going to have a lot of restructuring. We see it in a lot of these companies filing for bankruptcy, trying to redo their credit structure. So, no, there's definitely a stag there. Not the inflation part, but definitely a stag in certain sectors.
All right, John, good talking with you this morning. Thanks so much. John Sylvia is the founder of Dynamic Economic Strategy. It's looking like we're going to see another morning of gains for U.S. equities. S&P futures are higher by 10 points at the moment. Dow futures up 132. NASDAQ futures higher, but by just 1 point. The 10-year Treasury yield, 0.90%. You're listening to Bloomberg Daybreak.
This is a Bloomberg Money Minute. Futures point to gains at the open on Wall Street. The Fed is in focus this week, with officials likely to recommit to using their full range of tools to support the economy during the coronavirus pandemic. Friday brought the first positive jobs headline of the summer as millions of workers furloughed temporarily started their return to work in May. But that also masked a grim reality for the millions still waiting to go back to work, still waiting for benefits or losing their jobs permanently. There are still 15 million more Americans unemployed than there were the year before. One drug giant has approached another about merging. AstraZeneca made preliminary moves toward Gilead Sciences last month to gauge interest in a possible tie-up. Gilead has attracted investor interest as its antiviral drug for COVID-19, Remdesivir, worked its way through clinical trials in recent months. If they did merge, it would be the biggest healthcare deal on record. Gina Cervetti, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy-uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
Casting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow, and we are just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are higher this morning as New York City joins economies across the country in reopening for business. European equities are lower after a positive day for stocks in Asia. Treasury yields are higher, and oil is gaining after OPEC and its allies struck a deal to extend output cuts.
Now we're coming off a weekend of peaceful protests across the country, with rallies from New York to L.A. drawing little to no violence. Demonstrators lined the streets in New York with peaceful gatherings, leading Mayor Bill de Blasio to end the city's curfew a day early.
And honestly, I hope it's the last time we will ever need a curfew in New York City.
And streets were packed in our nation's capital. Protesters marched peacefully in Washington. After several days with no violence, President Trump ordered the National Guard to leave D.C. Overall, the weekend saw relatively few arrests, while Chicago joined New York in ending its curfew.
Now New York's mayor turns his attention to today.
The beginning of phase 1, the restart of the city, the restart of our economy, the restart of people's livelihoods.
Some non-essential retailers are reopening their doors. Others will be limited to delivery and curbside pickup. Restaurant dining remains closed for now. That will ease in phase 2 with outdoor seating at most establishments.
Returning to corporate news now, 2 of the biggest drug companies in the fight against COVID-19 could be looking to team up permanently. Bloomberg News has learned that AstraZeneca has made a preliminary takeover approach to Gilead Sciences. We get more from Bloomberg's Aaron Kirchfield in London.
The CEOs of both companies have a connection through their past work at Roche. It was kind of an approach at a high level to gauge interest, and now the big question is what happens next.
A combination of AstraZeneca and Gilead would be the biggest deal ever in the pharmaceutical industry. Right now, AstraZeneca shares are down 2% in London. Gilead's up nearly 4% in early trading.
And oil is gaining this morning after OPEC and its allies agreed to extend output cuts. A one-month extension promises stricter compliance to ensure members don't pump more than pledged. And checking prices right now, NYMEX crude oil is up 0.7% or 27 cents at $39.82 a barrel. Brent is up 1.2% or 49 cents at $42.79 a barrel. Again, futures are higher. S&P futures up 11 points. Dow futures up 150. NASDAQ futures up 7. 10-year Treasury down 3/32, yield 0.90%, and the yield on the 2-year 0.21%. COMEX gold is up 0.9%. Straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, Karen, thank you. It is 6:33 on Wall Street. Now let's get more on what's going on around the world. Here's Amy Morris. Good morning, Amy.
Good morning, Nathan. The NYPD has come under fire for using extreme tactics in the past 2 weeks on protesters who came out to march against police brutality. New York Mayor Bill de Blasio says police reform is coming to New York City.
36,000 members of the police force, the vast majority of whom do the right thing every day, answer a noble calling, keep us safe. And a few who do the wrong thing, and those few have to experience consequences, and we have to see it.
Police reform is what protesters have been marching for since the death of George Floyd in Minneapolis. And Minnesota has launched a civil rights investigation into the Minneapolis Police Department. Now, a majority of the members of the Minneapolis City Council say they support disbanding that city's police department. Councilman Stephen Fletcher.
I think it's intense because we are all so shocked and humiliated and horrified at what happened to George Floyd.
They've already banned the use of chokeholds and neck restraints. Congressional Democrats are coming out with legislation to overhaul police accountability. That package, expected today, is called the Justice in Policing Act. It would overhaul legal protections for police, create a national database of excessive force episodes, and set new standards for police training. And a new watchdog report says the vast majority of complaints about New York City police officers' mistreatment of youth stemmed from encounters with black children. The Civilian Complaint Review Board says nearly 2/3 of youth complaints involve children of color, including many stopped for, quote, innocuous activities. Those massive protests are adding to coronavirus concerns. New York Governor Andrew Cuomo talks about testing efforts.
We are concerned that those protests may have increased the spread of the virus. We're going to do 35,000 tests per day just in New York City. Snapshot, snapshot, snapshot. So we'll watch it on a daily basis to find out exactly what is happening.
Still, New York City remains on track to start phase 1 of reopening today. As many as 400,000 New Yorkers could board buses and subways to head back to work this morning. MTA is increasing its schedule by reversing cuts put in place at the start of the pandemic. Social distancing markers have been placed on subway platforms. Hand sanitizing stations are being scattered throughout the system. While the city starts phase 1, New York's Mid-Hudson Valley region enters phase 2 tomorrow. Long Island starts its second phase on Wednesday. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
Thanks, Amy. It's almost 6:36 on Wall Street. Time for the Bloomberg Sports Update. Here's John Stashower.
Well, Nathan, the Knicks and 7 other NBA teams will not be resuming their season, so they're going to be going about 9 months without playing a game. But if there's no baseball season, everyone's going to be going 17 months without a real baseball game. Still no labor deal. The chief negotiator from the union wrote a letter to the deputy commissioner pointing out that while other leagues are moving forward, MLB is depriving Americans of baseball in furthering their demand for unwarranted salary concessions. There will be a scaled-down version of the baseball draft on Wednesday. Rangers and Islanders among the 24 NHL teams that can get back onto the ice for voluntary small group workouts starting today. And golf is back this week. The Charles Schwab, Fort Worth, Texas. 16 of the top 20 in the field, including world number 1 Rory McIlroy, Brooks Koepka, Dustin Johnson, Phil Mickelson. And it was announced that the Memorial Tournament in Ohio that starts July 16th will be the first to allow in fans. They'll cap it at 8,000. The NASCAR points leader, Kevin Harvick, won the race in Atlanta. Former Patriots wide receiver Rashay Caldwell shot and killed outside his home in Tampa. He was 41. He was the Pats' leading receiver in 2006. Fell into a troubled life in his post-playing career with drug charges and health care fraud. He was due to be sentenced to prison next month. But Caldwell yesterday fondly remembered by both Bill Belichick and Tom Brady. And Kurt Thomas died at 64. He was the first American male to be a world champion in gymnastics. Could have been a star at the 1980 Olympics, but the U.S. boycotted that year. John Stashower, Bloomberg Sports. Nathan?
Thanks, John. 6:37 on Wall Street. And after mostly peaceful protests over the weekend, California's pulling National Guard troops out of the state. Here with more is Ed Baxter from our Bloomberg 960 newsroom in San Francisco.
The announcement came as peaceful demonstrations again popped up across the state, including one on horseback, another on wheels, as protesters continue to call for police reforms. A timeline for the pullout not provided, but Los Angeles Mayor Eric Garcetti said some troops would begin departing overnight. A small number of units will be stationed nearby until June 10th to provide emergency support if needed. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
All right, Ed, thanks. On the economic front, it promises to be a busy week in Washington when the Federal Reserve meets to set policy. Here with more is Bloomberg's Vinny Del Giudice.
The Fed's benchmark interest rate is poised to remain near zero for an extended period as the economy absorbs waves of financial aid. There are signs it's paying off, with a surprise drop in May unemployment. But at 13.3%, the jobless rate is still running higher than the last recession, and it could go up again for a variety of reasons. Also on this week's data calendar, a flurry of inflation numbers, with economists forecasting a lull stemming from the economic washout. Vinny Del Giudice, Bloomberg Daybreak.
All right, Vinny, thanks. 6:38 on Wall Street.
The following commentary is from Bloomberg Opinion.
There are two recessions, not one. I'm Justin Fox, a columnist for Bloomberg Opinion. Almost 90% of the 21 million jobs lost in March and April were in the 6 lowest paid of the 11 super sectors into which the Bureau of Labor Statistics divides our economy. Pretty much all of the 2.5 million jobs created in May were in those sectors too, with leisure and hospitality leading the way in both losses and gains. Meanwhile, in higher paid sectors such as professional services, finance, information, and government, the job losses weren't as bad in March and April, but in many cases they continued in May. In other words, we may have just emerged from the sharpest and shortest recession ever, but in large parts of the economy, including the best paid parts, the early part of the recovery may feel more like a recession than the actual recession did. I'm Justin Fox. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. Now, some other stories we're following. The CEO of CrossFit is apologizing for tweets that led Reebok to end its partnership with the fitness company. Greg Glassman's comments covered both the coronavirus and the police brutality protests. He has since called those tweets a mistake. Airbnb is joining vacation rental sites and seeing a surge in summer demand, one of the first signs of life for the travel industry. Airbnb had more nights booked for U.S. listings between May 17th and June 3rd than it did a year ago. Meanwhile, CEO Brian Chesky tells Bloomberg the company hasn't ruled out an IPO this year. And British Airways is battling on two fronts today. It's raised the stakes in talks with unions by threatening to fire all 4,300 of its pilots, then rehire them on individual contracts. BA has also started a legal process to block the UK's self-isolation requirement for arrivals. Futures moving higher. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids. Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
We're pleased to be reopening drive-through lanes and McDelivery. But helping keep you and our team safe is our priority, so we have fewer people working. And to make social distancing easier, we've installed screens in kitchens and service areas. Before reopening, all our restaurants will be deep cleaned, and we'll be cleaning equipment and surfaces even more often. For now, we're open for reduced hours and serving a reduced menu. And to keep everyone moving quickly and safely, please use contactless payment. With smaller teams, service will take longer than usual, so thank you for your patience. To see if your local McDonald's is open, visit mcdonalds.co.uk. McDelivery at participating restaurants only.
Dear Dad, Happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years. Hang on, kiddo. I'll listen in a sec. I miss you. See you soon. Love you lots, Luce. This Father's Day, send love straight to Dad's door with moonpig.com. Download the app today.
Network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, protests and remembrances. I'm Christopher Cruz. Former Minneapolis police officer Derek Chauvin is to appear before a judge by video link this afternoon. He'll be hearing the second-degree murder charges against him in the death of George Floyd. Correspondent Josh Campbell is in the city this morning.
Now, we know that at least two of the officers that were involved in that incident, their attorneys are pointing to Chauvin and his seniority, saying that he is largely responsible for Floyd's death. We will wait and see what Chauvin's defense strategy will be.
2 weeks ago today, Chauvin kept his knee on Floyd's neck for almost 9 minutes. Mourners in Floyd's hometown will be able to see his casket today during a 6-hour public viewing at a church in Houston.
George Floyd was raised in Houston's 3rd Ward and was a well-known former high school football player and rapper. Former Vice President Joe Biden expected to meet privately with George Floyd's family later today.
Correspondent Clayton Neville says Floyd's funeral and burial are scheduled for tomorrow. I'm Christopher Cruz.
Pandemic information is coming at you so quickly, it's hard to react, never mind plan.
How bad do you think it's going to get?
How much more cutting do you need to do?
Here's help. Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And good morning, I'm Karen Moscow. Futures on the rise this morning. S&P futures are up about 18 points. Dow futures up 211. NASDAQ futures up 18. The DAX in Germany's down 0.2%. 10-year Treasury down 4/30 seconds. Yield 0.91%. Yield on the 2-year 0.21%. NYMEX crude oil up 0.8% or 32 cents at $39.87 a barrel. And COMEX gold is up 0.9% or $15.20 at $16.9820 an ounce. The euro 1.1273 against the dollar. That's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Karen, President Trump says the National Guard can return to their home states after patrolling streets during a quiet weekend of protests. Democrats are mounting a new effort called Fair Fight to push back against a Republican campaign that seeks to undermine public confidence in mail-in voting. And Iran is reportedly prepared to agree to further prisoner exchanges with the U.S. if Washington is also ready to release Iranian nationals. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg, Nathan.
Okay, Amy, thank you. We are live from the Bloomberg Interactive Brokers Studios, where it is 6:48 on Wall Street. Time now to check what's going on in D.C., a city that has become an epicenter of protest against police brutality following the killing of George Floyd. President Trump says he's ordered National Guard troops to pull back from the nation's capital after this weekend's peaceful demonstrations. Washington, D.C. Mayor Muriel Bowser tells Fox News Sunday the president shouldn't have threatened to call in active duty forces.
What you saw, and I won't have it reduced to a spat, was how I have to defend our taxpayers. And it's sad to say that we would have to defend ourselves against federal forces.
Acting Homeland Security Secretary Chad Wolf credits the show of force with calming things down in the nation's capital.
This is about law and order. This is a country built on law and order, and we're going to address those protesters that are destroying businesses, that are targeting law enforcement officers. We can't have that go on day after day.
He was on ABC's This Week. The demonstrations have sparked a new rallying cry: defund the police. Democratic Senator Cory Booker tells NBC's Meet the Press those aren't the words he'd use, but he does understand the sentiment.
For black people in this country, we've thought this country is out of control in the way it polices our communities and individuals for a very long time. And this awakening is so important to create real substantive change, not just lip service from politicians.
And on CBS's Face the Nation, Attorney General William Barr said he doesn't think racism is systemic in law enforcement.
I understand the distrust, however, of the African American community given the history in this country. I think we have to recognize that for most of our history, our institutions were explicitly racist. Since the 1960s, I think we've been in a phase of reforming our institutions and making sure that they're in sync with our laws and aren't fighting a rearguard action to impose inequities.
And that's some of the conversations from the political shows heard every Sunday on Bloomberg Radio starting at 11 a.m. at Wall Street time. Conversation continues this morning now with Brown University Political Science Chair Wendy Schiller. And it is interesting, Professor, to see how this debate has shifted from a slogan of Black Lives Matter now to defund the police. And it seems like President Trump is trying to pin that slogan on his Democratic rival, Joe Biden. How do you see that working out potentially?
Well, I mean, President Trump is very good at this. And Nathan, I think, rhetoric and branding matters. There's a lot of articles going on about Camden, New Jersey, where they basically dismantled the structure of police and then revamped it. So I think that's the sort of problem the Democrats face. How do you take the energy and the momentum for the largely peaceful protests, with the exception of a lot of looting and rioting in particular places, and take the momentum and turn it into something that you can attain, that you can explain to voters. So revamping, reforming, re-envisioning how we are policed in America, I think people could really say, okay, let's talk about that. That's a conversation we have to have. But when it's defund, I think that puts the Democrats at a disadvantage in a lot of parts of the country.
And we're going to see a real stark contrast today between the candidates when Joe Biden meets later this day with the family of George Floyd before the funeral in Houston. At the same time, President Trump is going to be meeting with law enforcement. It seems like the choice couldn't be much starker for voters.
Yeah, the question is, are voters going to place a paramount importance on this? I mean, it's June, and things are just really, as difficult in this country as they've been for, in anybody's memory. And November, the interesting thing about a recent poll that came out was that the president still gets significantly higher marks on the potential to fix the economy, do better in the economy. Trump is still doing much better on that than Biden. And that is something that is fundamentally important to every American, no matter where they come from, race, class, ethnicity. So when you think about that, and you think about November and the vote choice, the Democrats have to be attentive to this particular issue. Of course, the country has to. However, you can't put yourself at such a disadvantage all summer long in messaging that when people turn their attention to the economy again, they give Trump an inherent advantage.
A lot of attention right now is on former military leaders, the latest of which is former Secretary of State Colin Powell going on another of the Sunday shows and saying he's going to endorse Joe Biden, adding his voice against the president threatening to use the military. And we also saw Republican Senator Mitt Romney marching with the demonstrators yesterday. What impact do you see from both those things?
I don't see any major public impact. I think establishment, quote-unquote establishment Republicans opposed Trump pretty vehemently in 2016 for a while, and then they died down afterwards. Republicans coalesced at the voting booths. More than 90% apparently, voted for Trump. So I don't think these former generals or these former politicians matter a whole lot to the rank-and-file Republicans who are going to vote in November. Mitt Romney matters for the U.S. Senate. If Lisa Murkowski and Mitt Romney can get together and get a few more Republican senators to say, listen, we can't just keep rubber stamping Trump. We've got a problem here. That creates a problem for Mitch McConnell, and then there are a lot more Republicans running and defending seats than Democrats for the Senate. I see this as a much more internal to the Senate issue for the Republican Party. How do you stay cohesive? How do you keep supporting the president? How do you keep that base when you've got senators who are not up for re-election, Romney and Murkowski, who are really starting to say, listen, enough is enough. That is sort of a fracture in the party that I think could potentially grow. Pay attention to the people who are in office, who have power. I pay less attention to the people who are no longer in office.
Always good getting your insights, Professor. Thank you so much. Wendy Schiller is chair of the Political Science Department at Brown University. Karen?
Nathan, thank you. It is 6:54 on Wall Street. It's time for the Bloomberg Small Business Report with John Tucker.
Karen, Nick Vujnovic is owner of Little Greek Fresh Grill in Tampa, Florida. His sales cratered as a result of the pandemic. Well, last Friday, he took a much-needed break, only to get a call from his wife and daughter. Peaceful protests over the death of George Floyd were followed by looting. Nick, who joins us now, your business was targeted, right?
My phone is just blown up with videos. The Ring camera started going off at 2:30. Phone calls from the landlord, from the restaurant managers, and from the neighboring tenants. And basically that, unfortunately, our store was looted.
You were preparing to open, or did the state of Florida already let you do some degree of opening when this hit?
Early on, they'd always allowed pickup and delivery, but people weren't allowed in the restaurant. And about a week and a half ago, they allowed us to open the dining room to 25%. And then this week, we're up to 50%. But most customers are still just doing pickup or delivery.
Now, Nick, can you estimate the damage that was caused by the looting and the vandalism?
It's ends up being like $10,000 worth of the broken sign, the windows, the equipment, the point of sale equipment. And, people say, well, you have insurance. I said, well, insurance only covers about half. They have deductibles, some things they won't cover. And so it'll probably be about $10,000. Insurance will probably cover about half of that.
Nick Vujnovic, owner of Little Greek Fresh Grill in Tampa. It's a heartbreaking story. We hope things work out for you. We're going to continue to bring you stories of small businesses struggling in the face of the coronavirus pandemic every day at this time right here on Bloomberg Radio. I'm John Tucker. That's the Bloomberg Small Business Report. Karen.
John, thank you. It is 6:56 on Wall Street. It's time for the Bloomberg NJIT STEM Report. Brought to you by New Jersey Institute of Technology, a top 100 national university in the latest U.S. News and World Report college rankings. Learn more at news.njit.edu. Let's see what's going on in science, technology, engineering, and math. Apple plans to let customers purchase many of its products by monthly installments. Bloomberg News has learned the company will offer a 12-month interest-free payment plan for several devices. Customers will have to use the Apple credit card. An autonomous mobility system that works like a wheelchair without anyone pushing it is scuttling around a Tokyo airport to help with social distancing. The machine seats one person and runs on its own without crashing, even when people jump out unexpectedly. The ride lasts just several minutes, traveling from security clearance to the boarding gate at a maximum speed of 2 miles per hour. But hopes are high that the technology, which uses sensors and cameras, can help in other places, such as hospitals, parks, and shopping centers. And the Italian government says so far not enough Italians have downloaded an app to help health authorities trace contacts with persons testing positive for the coronavirus. 2 million people in Italy have downloaded Immuni, the app that uses Bluetooth technology to signal when someone comes in close contact with an infected person. Eventually, authorities hope 36 million will use the app. And that's today's NJIT STEM report. Futures this morning are higher. S&P futures up about 14 points. Dow futures up 170. NASDAQ futures up 8. 10-year Treasury down 3/32, yield 0.90%. And NYMEX crude oil is up 1/3%. Bloomberg surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversation.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Today at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
I would find it very difficult to argue that we're going to have a V-shaped recovery. The closest anybody's come to it is China, and it doesn't look like a V to me.
You may want to reduce the suffering because there's a risk that the whole system will come crashing down.
Now is exactly the wrong time for fiscal policymakers to get a case of fiscal rectitude.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From a reopening New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures positive. We're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Farrow together with Lisa Abramowitz. And on this Monday morning, Tom Keene, a market that is laser focused on one thing, reopening this economy.
Well, not only reopen the economy, we will talk about that through all the surveillance today, but sure, John, the symbolism of New York City, so hard hit 5, 6, 7 weeks ago, and yes, really back to open the last couple weeks, John, where you say to yourself, come on, come on, come on. This Monday is the come on where New York City reopens, and with that is that better jobs report, and of course the president talking that up. John, I thought the research over the weekend from Goldman Sachs, JP Morgan, and the others was just outstanding, putting shade and putting nuance on that jobs report of Friday.
Well, let's be clear, Tom, for this market, for the Wall Street community, for the global financial community, Friday never really ended, did it? Went through the weekend into Monday. The equity market continues to rally, and we continue to look ahead this week to a Federal Reserve. I just wonder how that payrolls report changes the Fed's approach to the news conference this week, Tom.
maybe a little bit of nuance to it, but I really don't think it plays in all that much. I thought it was great. Bruce Kasman had this with Feroli over at J.P. Morgan. You come down, and the amount up, they calculate it roughly a 15% recovery in the labor economy. I don't think that's enough to have Vice Chairman Clare to turn to Chairman Powell and say, change the plan. I just don't see that, John.
I totally agree with you, Tom. That's one thing to look out for this week. Lisa Abramowitz, we've got to start with New York City reopening, the long process of reopening. And I think for many people looking at the process play out here in the United States, on the economic side, I want to emphasize that, on the economic side specifically, the data's looked okay as we've slowly got that reopening process underway.
And that's, I think, what Wall Street is laser focused on. And I think that you would really wisely raise the point, the long road to reopening. Yes, today marks the beginning of phase 1 of the reopening, which will last at least 2 weeks before phase 2 starts. This is curbside pickup and things of that nature. That's the main thing that I'm watching today. Also, though, on the docket, to keep in mind, President Trump is meeting with some law enforcement at 3 p.m. at the White House. Interesting to see whether he makes any comments over the past week's developments. Plus, later in the day, the World Bank releases its semi-annual Global Economic Prospects report. And John, I will say to Tom's point earlier, the question about the jobs data, the question about economists' ability to predict what is going to happen with this economy globally is in laser focus. How much credence do we give some of these projections right now?
Well, this market's really getting ahead of it, isn't it? Tom, just to wrap things up, Lisa mentioning the President of the United States, several reports that we might get an address this week on race and on unity. Yeah. A lot of people waiting to see whether that will actually happen or not.
Well, an extraordinary weekend, and folks, we will go to our Kevin Cirilli here in about 8-9 minutes, maybe 10 minutes, and that'll be an important conversation. But John, I love what Greg Valliere said in his morning note on the president. He says this is a critical week for the president, and particularly how he frames the competition. Vice President Biden is a Democrat neutralist, or is a Democrat tilted over to the liberals? That'll be a topic for Mr. Cirilli here in a bit.
We'll head down to Washington in about 15 minutes' time. We've got to start on this market. What a rally we've seen off the bottom over the last couple of months. Mike Swell at Goldman Sachs joins us now. Mike, Friday. What did Friday change for you as you look ahead to the weeks and months ahead through 2020?
I think that Friday was just an example of a continuation of the impact of government policy. So big impact on the fiscal, big impact of monetary policy, that the rally can continue because the level of support from the government has been so significant, creating an enormous amount of cash that is really looking for a reason to get invested. I think that when you look at the employment report and the discussion you've had earlier today about the questions in the number, we're a long ways away from getting American workers back to work in a very meaningful way. So the job situation is going to be one that is going to continue to be an issue for the next 6 months to a year. And so I wouldn't necessarily call victory with regard to the job picture. I think we have a long, long way to go. And I think what you're seeing right now in markets is the impact of significant policy, liquidity, more so than confidence in reopening.
The policy effort has clearly worked. The Federal Reserve's objective was to divorce financial conditions from the real economy. We've done that. I think a lot of people looking at the data, Mike, and trying to work out whether the economic conditions catches up with where financial conditions has taken us. Is that a challenge for the next couple of months or a challenge for the turn of the year?
That is the number 1, 2, and 3 question with regard to how you think about financial markets here. And at Goldman Sachs, what we did last week, we have a daily forum where we get together all different investors. We brought in our multi-asset people, our fundamental equity investors, as well as fixed income, and had kind of a cage match around this topic. And the conclusion that we came to is that, number one, the financial conditions that have been supported by the Fed and by governments through fiscal policy will dominate in the near term. But in in the long term, it's going to be earnings and jobs that are going to matter. And I think that it's too early to call victory with regard to where earnings are going to end up. I think a lot of investors are saying that, we're going to jump back in 2021 to the earnings that we saw in 2019. We have a long, long way to go. And I think that there's a lot more repair that has to happen in the economy. We really don't know how companies are going to react to a different state of a global economy when we have an issue, a medical issue that's going to be so significant and change the way that we do business. So our view right now is that for the near term, policy wins, stay long risk assets, but over the longer term, it's going to be all about earnings and jobs.
Michael Swell, I want to go to your work with Goldman Sachs and before that with Friedman, FBR, as well. With your expertise in mortgage-backed securities, a lot of rents aren't being paid. A lot of commercial real estate of every gradation isn't going to work out. There's all the loans and the fancy derivative instruments off the back of that. Are you troubled at all by a pending real estate crisis in the nation because rents are not being paid?
I would say that the residential picture is going to be 100% correlated to the job picture. So if we expect to continue to get America back to work and we can drive the true unemployment rate below 10%, we're likely not to have a housing market issue, whether on the price issue or whether on the rent issue. And so I think in terms of housing, we don't have oversupply like we had oversupply in 2007, and we don't have too much leverage in the system. We've kind of fixed the very, very high LTV loan situation, the interest-only loan situation. We don't have borrowers that are leveraged as they were before. We're really going to be dependent upon jobs. So I think if we continue to see jobs improve, we don't have a housing market issue. I do think in the commercial real estate market, there's a lot of adjustment that has to occur. There's going to be a decent amount of restructuring of loans. There's going to be some defaults, obviously, on the retail side. But if you look at the commercial real estate market, there's a big debate there if we think that we're going to see a lot of companies move out of major hubs, major cities, and diversify their exposure, having a negative impact on commercial real estate. The other side of that is in a socially distant world, you're finding that companies are actually looking for more square footage to be able to bring workers back in a safe way. So we actually think that the commercial real estate market is one that still has a lot of opportunity. If we see reopening of the economy like the equity market is telling you, you ought to see stabilization in the commercial real estate market. And if you look in the world that we live in, not in the direct commercial real estate market, but in the commercial real estate securities market, we have not seen a significant recovery in pricing there. If we see the economy get back like the equity market is telling you, we think there's going to be a lot of opportunity in some of the mezzanine securities and commercial mortgage-backed securities to be able to earn equity-like returns.
Yeah. Mike, I'm just wondering, you were saying it's a time to stay risk on, and certainly a lot of people have been risk on. If you look at high yield bonds in the U.S., they've gained 22% since late March, and we've seen $3.5 billion flow into the biggest high yield bond ETF in the past week alone. Don't fight the Fed, but you can front run it. Has the Fed already been front run fully, or are there further opportunities here?
I don't think fully. I still think there's going to be a lot of demand for U.S. credit-related assets. Keep in mind, it's not just front-running the Fed, but we're in a global interest rate environment where there are no interest rates. We're basically zero around the globe. And the U.S. credit market still is a market that offers investors yield. Demand for yield is very, very significant. And I think people will continue to view not only the U.S. Treasury market, but also the U.S. corporate credit market as, in general, a safe haven. So I do think there is more room to run. However, more broadly around the question around risk assets and where we go from here. In the short term, we do think that policy zero rates are going to drive risk assets higher from here, but that's not going to last forever. In the end, it's going to be about earnings. And so in our discussion last week, our cage match around where we go from here and have risk assets gone too far, we definitely came to the conclusion that this is going to be a winners and losers market, both on the equity side and the credit side. And it's time to think a little bit about moving away from just kind of being long beta and really focusing on the types of companies that will be the survivors and will gain market share. And so we we do think active management will be a very important part of future returns versus just the beta.
Hey, Mike, we just want to know who wins a cage fight at Goldman Sachs. How does that work out over the weekend when that plays out?
Well, I'm 6'5", 220 pounds, so I'm the biggest person, so I always win. Who wins the cage match? The answer is short term, risk on. Long term, it's going to really rely upon earnings, and that the data that we have so far is irrelevant to the longer term macro picture. Stay tuned, follow what's going on in China, follow what's going on in South Korea in terms of reopening and what's going on with the consumer, what's going on with corporate earnings in those countries, because those will be leading indicators for what goes on here.
Mike Swell, fantastic work as always. Always appreciate your time, sir. Mike Swell there of Goldman Sachs. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, as the long road ahead as we take that first step and reopen New York City. In the first phase, much more still to come. From New York City this morning, good morning for our audience worldwide. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
All right, thank you, Tom, and good morning to you. A number of top former military leaders have denounced President Trump's threat to use active U.S. military to quell protests across the country. On CNN's State of the Union, former Joint Chiefs of Staff Chairman Colin Powell, a retired general who served under President George W. Bush, blasted President Trump.
We have a Constitution, and we have to follow that Constitution, and the president's drifted away from it. I'm so proud of what these generals and admirals have done, and others have done.
In the past week, several former top military officials, including former Trump Defense Secretary James Mattis, have raised the alarm and spoken out against the president. President Trump tweeted that the National Guard can return to their home states. The president had called in National Guard units from across the country to patrol the streets of Washington, D.C. And among the protest marchers in Washington was Utah Senator Mitt Romney. And he tells the Washington Post why he was marching.
And violence and brutality, and to make sure that people understand that Black Lives Matter.
On Saturday, Romney also tweeted a photo of his father. His father was the governor of Michigan in the 1960s, marching with civil rights protesters in a Detroit suburb. Romney is the first known Republican senator to march in protest. A majority of the members of the Minneapolis City Council say they support disbanding the city's police department. They have already banned chokeholds and neck restraints. Live from the Bloomberg Interactive Brokers Studios, you are listening to Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
influential.
We're Cadent. Keeping you and our people safe is our main focus, and our vital work must continue. You'll start to see more of us in your area as we increase our work to upgrade the gas pipes to keep the energy flowing into your homes and businesses. We may need to come into your home to complete this work, but rest assured our engineers are following all government guidance on PPE and social distancing. We continue to provide the critical gas emergency service, and if you smell gas, call 0800 111 999. To all other key workers, we would like to say a big thank you from everyone at Cadent. Cadent, your gas network.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
The numbers are great, and this leads us on to a long period of growth. We'll go back to having the greatest economy anywhere in the world, nothing close, and I think we're going to have a very good upcoming few months.
The President of the United States following the jobs report this past Friday. Good morning to you all. Alongside Tom Keane, I'm Jonathan Ferro. Together with Lisa Abramowitz, we're live on Bloomberg TV and radio. Tom, the risk, as always, with a single data point is that you extrapolate that improvement out too far too quickly. A topic of debate for us through this morning.
What's really interesting, John, to that point is how you correlate any kind of improvement in the job economy over to GDP. JP Morgan made very clear over the weekend, maybe they were wrong, maybe we're going to see a more rapid improvement, but they hedged it about 1, 2, 3, 4, 5 ways to Sunday to get John, say, to September.
A remarkable rally, Tom, off the bottom in the last couple of months. The S&P 500, 3-week winning streak coming into this week. Let's get you some price action worldwide with equity futures higher, up 0.6% of the S&P 500. We push higher by 18 points, about 2 hours and change away from the opening bell in New York City. In the bond market, Treasury yields just a little bit higher again. It's been really interesting to see this. 10-year yields now 0.91%, up a basis point. The curve steeper, the 30-year advancing 3 basis points as well. Another theme in the mix over the last couple of weeks has been that weaker dollar story, and that continues with a weaker dollar against the Aussie, just a little bit stronger, Tom, against the euro.
I want to point out, John, oil, Ed Morse with a blistering note from Citigroup about 2 hours ago, making clear he doesn't buy the inventory story, but oil, $42, $43 on Brent, gets your attention. Right now, we must consider Washington, and we have been really thrilled with our Kevin Cirilli, our chief Washington correspondent, who is not only looking at the many sides of the national debate on protests, but also the many parties involved and the different shades of gray in this great national debate. Kevin Cirilli joins us this morning. Kevin, the lead stories are about a refunding, defunding, abandonment of police forces. Gregory Vellier, among others, says this is a gift on a silver platter to the president, who this week can go after the vice president and say, what kind of president would you be? How will the president take this debate and push it towards Vice President Biden?
Tom, we're expecting to hear from President Trump this week in some type of address, whether it be national or at a press conference, where the president addresses race issues in this country. He's also likely going to discuss the issue of defunding police departments. It comes following over the weekend when Minneapolis City Council voted to defund their police department and to break ties with their police department. But what that would look like is really just a dramatic reshifting, I'm told, about how the city of Minneapolis reallocates funds. Greg's absolutely correct. And when I talk to Republican strategists on down ballot races, it's not just a gift, mind you, to President Trump, but also to Senate Majority Leader Mitch McConnell, who's trying to keep control of the Republican-controlled Senate. Republicans want to have the debate of defunding police departments. Now, in contrast to that, former Vice President Joe Biden's campaign wants to have the open discussion of making sure that African Americans are also heard. But beyond that, he needs that African American coalition that Obama had to turn out for him if he wants to beat President Trump.
How alone is the president on this Monday?
Well, I think in terms of putting together Republicans, he has not seen a widespread flocking away from Republicans who are currently in office. Now, former Secretary of State Colin Powell over the weekend, the president tweeting out that he takes issue with Colin Powell going to vote for Joe Biden. But in terms of folks who are still in office, the president enjoys popularity in red states.
I'm just wondering, Kevin, shifting gears a little bit from the defunding of the police and the political debate around that, the reopening of the United States and the economy. I'm wondering about the dilemma for Republicans after the jobs report on Friday showed a much better than expected scenario, how much pressure that reduces on their expectation for further fiscal stimulus.
Well, that's a great point. And in terms of more economic stimulus, I think based upon the conversations that I've had at the end of last week with Republican members, they're still anticipating sometime in between, right when they return from recess at the end of July and right before the August recess, so like July 23rd through the first week of August. That would be the window, Lisa, for there to be another economic round of stimulus passed, but also some type of legislation likely, maybe, on reworking some police.
I apologise, Kevin. Kevin's already down in Washington. Kevin, we're going to leave it right there because of the connection. Thank you very much, sir. Let's talk about this reopening, Tom Keene. Let's get over to Herald Square, 34th Street here in Manhattan. Absolutely unbelievable contrast as we begin the slow process of reopening this economy in New York City. Yet still, some of the major retail organizations aren't just unable to open their businesses. Some of them are still boarded up, Tom.
Well, they're boarded up. You really nail it, John. It's two different thrusts going on here. Well, three. One of them is the public wants open now. There's no question about that. You can feel it on the streets of New York. You can see it with people, and again, heavily masked. But the other two themes, John, are the boarding up because of the protests and looting, which seems days ago now. The looting, definitely. And then the other is just how do you get these stores open fast? I'm going to be fascinated, John, to see where we are Thursday and Friday with this so-called opening of New York.
So, Lisa, this is phase one. Talk to me about what's in phase one, what's phase two, what's phase three, and how quickly do we get there?
Well, it really depends on the data, right? I mean, it's not going to be less than 2 weeks in each phase as the officials try to gauge the data. And honestly, John, I'm looking at the data coming out of Arizona, where the ICU beds are getting filled up and the cases are increasing. California, Florida, the case counts are going up as some of these regions reopen. We are expecting the same thing in New York. There is a question about the protests and how much of a surge there's going to be there. All of these will be factors in the second phase of reopening. The initial one is curbside pickup and construction and some basic functioning. It's not going to be all doors open. I am curious to see how many people show up, though, John.
The bias in this market and the shift we've seen over the last couple of weeks, Tom, has been absolutely remarkable. We all saw those pictures of packed beaches several weeks ago. And I said at the time, your view on those packed beaches is probably closely aligned to your view in this market. It either triggered fears of a second wave of infection or it triggered encouragement, fueled encouragement about an economy getting back to normal quicker. And it reminded me of that blue dress, gold dress. Do you remember the blue dress, gold dress? Some people saw blue, other people saw gold. I think everyone at the moment is seeing gold. We've seen a massive shift in the last couple of weeks.
We're doing a huge shift and, of course, stunning move on Friday. But, Kevin, what's so interesting here is away from all this debate has been some of the pandemic data of the last number of days, particularly in Texas, is a bit distressing. I don't want to oversell that, but it's an issue to me.
Yeah. We'll try and pick up on that theme a little bit later in the programme, Tom. Kevin Cirilli will be back with us a little bit later this morning from New York City this morning. Good morning to you all. This is Bloomberg.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.org.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a Bloomberg Money Minute.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, 2 hours away from the open and bound. Here's your price action. From New York City, with equity futures up 16 points on the S&P 500, we advance by another 0.5%, adding some weight to the gains of last week and the last 3 weeks for that matter as well. In the bond market, big theme going into the Fed this Wednesday. Yields higher, curve steeper, up another basis point on 10s today to 0.9%. Outside of that, that in foreign exchange, the dollar weakness. We get some dollar strength against the euro coming back 0.2%, but some weakness elsewhere in G10. And I just want to round things out with a look at crude for you. WTI just slightly negative, $39 a barrel. Brent at 42 coming in 0.6%, even as OPEC Plus agreed to extend cuts. But Tom, it's the industry that I want to talk about just for a brief moment as this headline crosses the Bloomberg. It comes from Reuters that BP plans to cut up to 15% of jobs by the end of 2020. Last time I checked, BP had about 70,000 employees. Do the quick maths, that's a little over 10K in terms of job losses, Tom, if they go there. And this speaks to the theme, I think, of the next 6 to 12 months. How do these companies right-size? Get away from the equity market just for a moment. How do they right-size for the world that we have to adjust to in the coming months?
And what's interesting, John, is usually the cuts are 3 or 4%, maybe 5% is a big cut. So to see 1.5 there is a big deal. I think one of the things here, John, is a nationalization or government intrusion into oil. How United Kingdom intrusive is British Petroleum? I've got a concept of Total. I've got a concept of Exxon. Is BP, is it incestuous with the British government or is it truly separate?
I'll be diplomatic and say it's far less intrusive than what we see in Russia or Saudi Arabia. How's that for a response, Tom?
Well, I guess that works, but I mean, it's, folks, BP is, I think, sort of ephemeral out there. It's had an interesting 10 years as well. So, John, I think that, it'll be interesting to see, as you say, if there's follow-on to this. John, why don't you bring in our next esteemed guest who can esteem for us on the bond market?
Let's bring in Lale Topcholu, shall we, of JOHCM. Lale, fantastic to catch up with you. In the energy space, is this a cyclical rotation or a dash for trash? What have you seen in the market over the last several weeks, and how would you characterize it?
I mean, the energy universe, along with any of the deep cyclicals, both in the equity and the credit markets, are showing the same trends, which is it was beaten down so badly that if you believe in the recovery, these are the next sectors to recover. So there is a little bit of a catch-up that the market is trying to do. And part of it is also these are the sectors that I think people dumped very heavily early on. And now just seeing the strong rally. So, from a performance perspective, I suspect people are also feeling the pinch. For us, we talked about it before, energy is a no-go on the credit side. Limited upside, all downside. And it's a continuous cyclical sector that keeps disappointing on the downside.
Lale, when does reality hit and what drives it? We talked to Mike Swell, a former colleague of yours from Goldman Sachs, about 30 minutes ago, and he said there's this real push and pull. The momentum of the moment is the big push going forward. Then there's this big headwind on the horizon, which is, what do the fundamentals look like? It's 6 to 9 months' time, and I don't think we're thinking about the latter at the moment. We're just focused on the former, aren't we? How do you think that plays out?
I mean, I think both the equity and the credit markets have basically written off 2020. I think what's challenging is what I don't buy is I don't think you can fully divorce fundamentals from the economic reality. And the way I've done this, actually, if you went back and read through all the self-led research written in 2007, 2008, you will see a similar trend. Everybody gets really excited about liquidity. In fact, you will enjoy this in March of 2008, when JP Morgan bought Bear Stearns, Lehman's CEO was on the record in an interview saying Fed action has taken solvency off the table. And we saw that didn't really happen. What happens is when the economy starts catching up, and, we were down 90% in activity. If we recover back and stay at down 50%, that's not a full recovery. And what matters is that's going to form your 21 and 22 estimates.
Lale, you did say in your notes, increasingly, I believe that central banks are here to manage asset prices. If they truly are committed to reducing market volatility, which has translated into managing asset prices higher, why not just go all in risk? Because that's what's worked, and the Fed has shown no willingness to back away from its programs.
It's an excellent question. It can certainly be the case, but that was also the assumption. People went in all in on Lehman, and then it didn't work out. So that's really Russian roulette. And I did listen to your interview with Dudley, and I think The challenge is, if you believe on that, that really creates a huge moral hazard because, products are going to grow aggressively. They're going to become systematic. They're going to form systematic risk to the economy and to the market, and you're going to get a Fed bailout, and that will eventually call question Fed's independence. I'm not sure we're there yet. I have to have a little bit more faith in the institutions than that.
Lolly, are bonds fixed income right now? Do you perceive it as a coupon and danger zone, or can you actually find total return? I don't understand how you get total return with yields, whether they're creeping or moving higher, whatever. I believe that means price down. Can you actually make a total return over the next 12 months in this game?
It's more about the carry on the safer side, that's for sure. And to make a total return, you really have to, take a leap of faith and get into some of these beaten down sectors. That's the only other way. The rest of it is just carry. We have been on the investment grade side, and what we have done is we'll basically have looked over crossover companies that are getting where the capital structure is split. Part of the leg is in high yield, part of it is in IG. So the IG company will continue to get access to funding, which should pull the spreads for the subordinated part of the capital structure as well. But it's very few opportunities like that.
What do mere mortals do? I mean, we're on a simulcast here nationwide. People are listening. People are watching. They can't do a sophisticated spread off IG and HY. That's bond jargon, folks, like what you hear from Lisa Abramowitz and John Farrow. So if I can't do the IG, HY game, what do I do if I just want to make a coupon?
If you just want to make a coupon, you just stay with the higher quality and do what everybody else has been doing, which is follow the Fed. But again, that's not going to give you substantial returns. What we have done on our portfolio, I call it the 25% club. We basically barbell between cash, credit, defensive equities, and some cyclical equities. Because, to John's earlier question, if the recovery surprises to the upside, you're going to make a lot more money on the cyclicals. And if the economy disappoints, then we have the protection through our cash holdings.
And
just in terms of shocks, Lally, I just want to wrap things up with a final question. Thank you very much, Tom Keene. Lally, you mentioned Lehman earlier, and someone said this a couple of months ago to me. Just let's park the V-shaped recovery that we've seen in the market. Put that to one side. Are you saying that what we've seen wasn't Lehman, it was bear, and there's more shocks to come, perhaps an even bigger one?
What I'm saying is when the economy slows down, it exposes over-levered balance sheets, it exposes fraud, it exposes bad management teams. And those are the things that people haven't really focused on that. All people have focused is central banks is here, and here's the gush of liquidity. One thing I will leave you guys with is when sell-side publishes a note and they say, this company is fine because they got a credit amendment, do me a favor, read the credit agreement details and work backwards to the projections from the leverage ratios. What you will see is pretty drastic numbers. Nowhere in consensus are people focused on that.
Lally Tufchalu of JOHCM. I should also add that she is one of the few people that actually reads the prospectus for some of the stuff that she buys. Lally, fantastic to catch up with you. That was a little bit of snark. I know many of you do before everyone starts writing it to me. Tom, let's get back to their story on job cuts because I think it's absolutely critical. And to build on that conversation that we just had with Lally as well. We don't know what this economy really looks like in 6 to 9 months. We have no idea what capacity many of these multinationals will be operating at for a sustained period of time. What we do know in the short term, as we see the data come through, is we're focused on the rate of change, just how quickly we improve. And I think to Lali's point, and to build on what Mike Swells told us this morning as well, it's going to be in the months to come where we get our hands around that plateau. What does that look like in several months' time, Tom?
Right. It's also going to be the distribution of what those jobs are. Jobs at British Petroleum are not the same as restaurant and bar jobs in New York City or in Washington. So the distribution of incomes, what quality of salary jobs we're going to lose is going to be something.
I I would add to that as well, Tom, and make it a little bit more nuanced. And Lisa, I know you can speak to this, that what we learned on Friday was just how temporary some of the layoffs were that have taken place over the last several months. What we'll learn over the next several months is the permanency of some of the job losses. And I might add, the job losses still to come as well.
There was a lot of focus on the adjustments within this data, the idea that the jobs report that we got on Friday included furloughed workers as still being employed or coming back online, and this adjusted things to a 3 percentage point lower unemployment rate than otherwise would had. The question that I have, though, is not the exact number. It's exactly to the point that you're making, John. As this goes on, companies that have avoided making layoffs, like on Wall Street, a lot of the white-collar jobs are thinking of making job cuts, and we're hearing this across the board. It goes to what BP is doing. The economy is not going to make a V-shaped recovery, according to the vast majority of economists. As a result, John, there will be job cuts that will be permanent, and not very many people can game this out.
Yeah, these companies wanted to remain really, really nimble to see what the demand backdrop in the months to come actually looked like, and only then would they start to right-size. It wasn't in the shutdown that these companies would right-size the business. It's in the next several months, at the turn of the year, that they have to think about what demand will look like for the next several years outside of the shutdown. From New York City this morning, as we slowly begin the process to reopen this economy right here in New York City, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, live on Bloomberg TV and radio, getting you set up for another trading week after another really decent week of gains on the S&P 500. The banks, what a rally the S&P 500 banks had last week, up more than 16% over 1 week alone, and still down and down hard on the year so far through 2020. Futures this morning advancing 18 points on the S&P 500. We are up 0.6% from New York this morning. Good morning. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. New York City has been seen as the epicenter of the coronavirus outbreak in the U.S. It begins the slow process of reopening today. After 3 months of closures, a limited range of businesses, construction, manufacturing, wholesalers, and previously non-essential retailers can resume work today with restrictions. Protesters have been marching for police reform since the death of George Floyd in Minneapolis. Well, now Minnesota has launched a civil rights investigation into the Minneapolis Police Department, and a majority of the members of the Minneapolis City Council say they support disbanding the city's police department. Councilman Stephen Fletcher.
I think it's intense because we are all so shocked and humiliated and horrified at what happened to George Floyd.
They've already banned the use of chokeholds and neck restraints. Congressional Democrats are coming out with legislation to overhaul police accountability. That package, expected today, is called the Justice in Policing Act. It would overhaul legal protections for police, create a national database of excessive force episodes, and set new standards for police training. President Trump says the National Guard can return to their home states. Major General William Walker, in charge of the District of Columbia's National Guard, says his soldiers were there as defenders of the White House.
And our guardsmen, Army and Air, held the line and kept people from advancing on the White House proper.
The president says he reserves the right to request the troops return to the district, as retired military leaders strongly criticized the president for his response. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Charlie Pellet. Professional basketball is on track to restart its season at Walt Disney World in Orlando, testing whether American sports can return smoothly from a months-long blackout. The NBA's Board of Governors approved a plan to resume the season at the theme park complex, where 22 out of the 30 teams will begin games on July 31st. Pro teams interrupted by the coronavirus pandemic have been looking at how they can safely play again, and the NBA is seen as a bellwether for much of the sports world. Penn State is starting to bring some students back to campus, including 75 football players. Voluntary workouts for football players who have been medically cleared can begin on June 15th. And Mavericks owner Mark Cuban says he will not be running for president, but it was something he was thinking of doing. Cuban told the Axe Files podcast he did polling and was only able to get up to 25% of the vote, so he dropped the idea. That's the Bloomberg Business of Sports Report. I'm Charlie Pellett.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Global news. So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
You love TuneIn for live-breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
We could review the chance of even extending agreement to the end of 22. So OPEC Plus is until death do us part.
The Saudi Arabian energy minister on the unusual alliance between OPEC and Plus, being Russia. OPEC Plus extending output cuts. Crude slightly negative on WTI at $39.30. Brent crude $42 at around about 30 cents. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Bramwitz, this is Bloomberg Surveillance live on Bloomberg TV and on radio, getting you set up for the price action through the trading week with the Fed on deck a little bit later this week. Equity futures are positive by around about 0.6%. We're up by 18 points on the S&P 500. There is no doubt, Tom Keene, that we have made some progress on a series of issues. A liquidity crisis a couple of months ago, the Fed has done a lot of work there, and oil. It wasn't so long ago that crude was deeply negative just for a very brief moment in time, and here we are, back up near 40.
Just extraordinary to see, and really, folks, the path from $30 Brent, the global price, the floating price, up to 40 has just been a surprise for all. Joining us now, Amrita Sen of Energy Aspects. Amrita Sen is outstanding at the dynamics of supply and demand. Amrita, I want to dovetail your wonderful narrow work with those that take a more geopolitical strategic work, because it folds in. If OPEC plus members, and let's go with OPEC, if they cheat, how does that affect your world of the minutia of supply and demand?
Hi, morning, Tom. I think in terms of the question you asked about compliance, if they cheat, which, by the way, we are assuming in our balances, we just cannot see how Iraq, Nigeria, Kazakhstan, given their broader fiscal issues, they just are so cash-strapped, will comply. It just means that the rebalancing takes longer. It is simply that. Supplies are now falling faster than demand. We've been saying this right from the start, that the stock draws will start from early June, and they have begun. But the more these guys cheat, it just means that the overall supply number, the reduction from OPEC Plus, will be less than what the headline number suggests.
Rita, I'm struggling to understand the supply-demand dynamic right now. A lot of people saying that the promised cuts of OPEC Plus and the potential enforcement of them, which has been a challenge for years, that has been the main driver of some of the recent price gains. And other people raise the concern that the shale patch is slowly starting to bring rigs back on. How much is this the story, and how much is demand still the main driver here? How quickly the global economy can get back up to speed?
I think you're exactly right. I think the global demand, at least in our view, is still very much the key driver. We did fall to record low levels in terms of demand. Now we are recovering. And that just means that you do need higher supplies. Now, I still stand by the problem we have in the market in oil, that is, the data is opaque, the data is very lagged. We still don't know just how much we fell by. So if we don't know how much we fell by, but the markets assumed we would hit tank tops. I remember talking to you guys about that, but we never did because maybe demand didn't fall by as much as expected, even though it was very, very weak. And because of negative prices, supplies fell tremendously, and that's what got us to overshoot to the downside. So in some respects, we have overshot to the upside right now, but we do need some of that supply back because now refineries are bringing back production and demand is rising. I still think we've gone a bit too far because the demand is fragile. Supplies from the U.S. are going to start to come back. So, it's not like a slam dunk that, of course, prices should be rising from here.
Rita, do you find that supply in the United States is more elastic when prices roll over aggressively than when they rally?
Yes, I think that the rate of change is absolutely the critical thing. But, the main thing I will say for right now, especially because you ask about the U.S. and in relation to gasoline demand, it's unemployment. On all our economic models, that's the biggest driver, even more so than prices.
Just want to fit in a final question as well, Rita. New York City reopening. I think we're all trying to get our hands around how quickly demand recovers. This is a slow process for New York City, but going global to the United States beyond China, where we have at least a longer data set. What's the recovery in demand look like at the moment, Rita, for these economies reopening?
I mean, if you believe that, say, demand fell by about 25 million barrels per day at the bottom, which was in April, we have easily recovered about 10 to 12 million barrels per day in May alone. And right now, we believe global oil demand is about 90 million barrels per day, give or take. Again, parts of China are actually back above last year's levels because the government has, it's basically driving a big stimulus package. Europe isn't, US isn't. It's going to take a long time, particularly in the aviation sector. But yes, economies are opening up around the world because lockdown simply isn't sustainable for growth in the medium term.
Amrita Sen of Energy Aspects. Amrita, fantastic to catch up with you to get your thoughts, as always. Lisa, let's build on this just for a little bit. We all had the trade data over in China over the weekend. I think a lot of people looking at the various industries to see what imports and exports look like. When it comes to imports of commodities, I think it's always important to look at volume and not nominal value, given where commodities were, say, 12 months ago compared to now. And the volume of commodity imports into China is actually recovered really quite well as that economy is reopened. I think what we're looking to see is how quickly the same thing, just in terms of consumption, happens here in the United States.
And I think so far, early indications are people are driving around much more, but they're still not flying all that much. And that is a major aspect of oil consumption. A lot of questions in the data, and especially as we look at a New York City reopening, John, I have to say that if you look at the projections, 400,000 people may be going back to work. How many of them will? How many of them will actually start commuting? And these are some of the big questions that really factor into the demand side, which is still at this point the main driver of oil prices more than even supply, John.
And let's talk about curbside pickup as well, Tom. How many companies, how many retailers can actually take advantage of curbside pickup in New York City? How many small retailers, small shops can actually take advantage of that?
I just don't see it. I'm glad you bring it up, John, because I think some of the ideas tossed around are pretty desperate. People just got to get out and do it and figure it out. We've got family members in China, and they make very clear, for example, in Shanghai, you do a policy and it takes 2 weeks for people to sort through it. Again, I wonder where we are at the end of this week, and I really wonder, John, where we are, say, the middle of August, trying to get the kids back to school in September.
It is phase one and only phase one, the very early stages of reopening this economy in New York City. From New York City this morning, good morning to you all. Alongside Tom Keane, I'm Jonathan Ferro, together with Lisa Abramowitz, looking at your equity market as we count you down to the opening bell. 1 hour and 35 minutes away, with equity futures up 0.6% on the S&P 500. We advance 19 points. In the bond market, here's the situation for you as follows. A 10-year Treasury on a 10-year up a single basis point to 0.91%. A 30-year up by 3. Higher yields and a steeper curve. That has been your story over the last month or so. And in foreign exchange, the euro, after a big rally over the last month or so, euro dollar coming back in a little more than 0.1%. From New York City, this is Bloomberg Live on Bloomberg TV and Bloomberg Radio.
Have you wanted to speak a new language?
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. EPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
At Asda, we're helping you shop safely by keeping our stores clean and limiting customer numbers so you can keep 2 meters apart. With our Scan and Go mobile app, you can reduce contact at the till too. Asda, we're all in this together. Subject to availability. Mobile data charges may apply.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
He does! Fabry wins it!
To standout stations and podcasts. Stay in touch with TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, plays to the 5, touchdown!
Search classic game replays to listen for free.
Time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
think we're going to have a very sharp rebound, and you'll see it in the second half of the year, probably with about 20% economic growth.
The latest economic indicators and survey results confirm a sharp contraction of the euro area economy and rapidly deteriorating labor market conditions.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Our simulcast of Bloomberg Surveillance. We welcome all of you on Bloomberg Radio across this nation, all of you digitally at home, still at home, even though New York City opens up today. A little bit of good news there. And, of course, on Bloomberg Television worldwide, we say good morning. John, I love that opening where we had Christine Lagarde looking at GDP, and your conversation with Lawrence Kudlow looking at a better than good jobs report. John Farrow, they couldn't be farther apart, could they?
Hopeful about this recovery in the administration, and the payrolls report on Friday giving them reason to be, and a lack of urgency, Tom, around the next move on fiscal policy. And I think that's really critical at this point. Catching up with the administration at the end of last week, they were telling me that they're going to wait until July to see what the data over the next month looks like. And when they talk about pro-growth policies, Tom, I think we're thinking about tax cuts and not demand side push, which is what we've seen over the last month or so, which is checks to Americans. And maybe we need some more help on the demand side. That'll be the debate over the next 30 days.
A big debate about that today. But, John, I notice up Dow 9,000 points off the bottom, Dow 18,000, and we continue to advance this morning as well. What is it within the data check, John, that sticks out to you?
You quote Dow points just to wind me up, don't you? So I'm going to brush that to one side and focus on the broader market, Tom. What sticks out to me is a fantastic payrolls report that even on the Monday after, we are still going to be talking about for the weeks to come. Do we need the data this week to validate what we saw at the end of last week? Do you need to see continuing claims roll over in a significant way? Or does this market and this momentum now have a life of its own? That, for me, is the question I'm looking to get answered later this week, particularly towards the back end.
Well, I agree with you. Getting to the back end of the week is absolutely extraordinary. Lisa Abramowitz, part of this, and we've heard this from any number of voices within our simulcast this morning, is this distinction between better quality investment grade bonds and the distressed world of high yield. What is the difference in those spreads right now? How have they had a dynamic off of that bang up job surprise?
Well, they have been contracting. It certainly has been risk on. But I want to build on something that John was talking about in terms of the market action today. NASDAQ futures are lower. S&P futures higher. We're seeing the ongoing rotation into value, into financials today. Yeah. And my question is, going into the rest of the week, how much longer can we see this rotation into some of the less loved names and away from big tech, which has absolutely dominated this rally? And that may speak to truly how risk on this market is, Tom.
I totally agree. I looked at that carefully this morning, folks. Russell 2000 kind of analysis and value versus growth. And it's amazing the persistency of that shift last week. We're going to do a lot of this through this week of Bloomberg Surveillance, market analysis. And there's no one better to coalesce all of these emotions and tensions than Daniel Morris. He's with BNP Paribas with market strategy as well. Daniel, we have come so far, so fast in this equity market. How do you restructure? How do you reframe on the Monday morning in June?
Well, I think it depends on the attitude that you had before we got all the news. I mean, we've been in the camp, I think like a lot of people, that it had been too much too soon. And if we got more and sooner than we had before, you've either capitulated or you've just become that much more nervous. And unfortunately, we're probably just that much more nervous. I mean, certainly the data was good, it's helpful, but when you try to think about how things are going to be 3 and 6 months from now, and in particular, when you look at earnings forecasts for the end of the year, there still seems to be a fairly significant disconnect that, if anything, has gotten bigger.
Okay, I totally take that point, and the chart of the earnings disconnect is known by anybody listening and watching this program. Great. Then what it comes down to is central bank support. Did that go away over the weekend?
Well, I guess it comes down to what's the mechanism for that central bank support? I mean, if we think about low interest rates, right, we've had that for a very long time. The increase in money supply, certainly there's no lack of liquidity, but I don't think it's necessarily that's driving up the market. So on the margin, I guess it comes back to if you do have any kind of setback, if there's any disappointments when we get into the fall, an increase in infections and concerns about a reimposition of the lockdowns, we will come back inevitably either to the question, how much more can central banks do when they've already done so much, and or if it's the need for further fiscal stimulus. At some point, we've got to worry about the debt that's being issued. So I think if there is one good thing that has come out about this, and I think you alluded to it a bit sooner, we may not now get as much stimulus in the next rounds from the U.S. as you would have thought before, given this data. And, I really actually think that is a good thing because the data is better, so you don't need it. And then also, again, we are going to have to worry about the debt levels at some point, and at least on the margin, that's not quite as big of a problem as you might have feared.
Dan, a lot of people say that the rally in stocks hasn't been entirely driven by Fed stimulus, but just the fact that Facebook, Amazon, Microsoft, Apple have all done well in this environment with a push to the digital. And if you look at the combined capitalization of the top 5 holdings in the S&P, it has doubled since 2013. How much can we see this rotation into the other sectors that are less loved, given the fact that we're not clear on how much of a fundamental recovery we have in the economy?
Yeah, I think it's exactly the right way to be thinking about it. And I would actually divide up the market in probably 3 different bins. So one, you certainly have technology, which we all understand is going to be a long-term winner from the pandemic. But at the same time, we also appreciate that valuations have gotten very high. Just by one measure, price to book for the sector is 8 times, which is an all-time high for the sector. So even if, we love those growth prospects, you're paying a lot for that right now. So without question of vulnerability, at least in the near term, for technology. I think the other part where we've seen those parts of the market that had massively underperformed until recently, you think anything around tourism and leisure and so on, a pretty significant opportunity there for those sectors to rebound. Now, maybe not sustainably, because a lot of this will come down ultimately to how optimistic we are about getting a vaccine and when. But, from a valuation point of view, that's clearly an opportunity. And then I think the other risk we need to keep in mind are exactly those defensive sectors that have done well, but have done well because we've been living under lockdowns, because we haven't had a vaccine. And as that starts to ease, these sectors, which have also become quite expensive, aren't going to see that long-term earning support the way you see in technology. So you think around, say, the markets, hypermarkets, you think about, cleaning supplies, and any other defensive sectors. I think that's probably the other key vulnerability that you need to keep in mind when you're looking at your portfolio.
Dan, is the market right now pricing in a second wave?
I think the question's twofold. So one, will there be a second wave? And I think most people are pretty sure that there will be. I mean, it certainly seems likely, but it's trying to anticipate then what the response is going to be. And I think there's at least there's some ground for optimism that even if there is a second wave, the economic impact won't necessarily be so great. I think there's 2 reasons for that. One, as opposed to the first wave, we know this one is coming, or at least we can anticipate it. So we'll be more prepared. Hopefully hospitals will be ready. We'll have, better capability around tracking and tracing. So hopefully can have a more focused, targeted response to whatever increase we do see. And we won't need to have nationwide lockdowns the way we've had so far. So again, the economic impact will be hopefully much less than we saw in the first round. And I think the second thing that certainly changed over the last couple of weeks is, to some degree, you could argue the media attention has shifted a bit. It's not every day on the front page, 24/7 on the TV about the pandemic. And you think about the psychological impact of that, people's desire to consume, to go out. If by the time we get to the autumn, if the media attention has faded somewhat, I think that will be at least beneficial in terms of psychology, even though it's without question still going to be a very serious health issue. People may not feel quite so concerned and stressed about the environment, and therefore you will have, on the margin, a greater propensity to consume in a way that we haven't seen over the last several months.
Hey, Dan, we've got to leave it there. Dan, always great to catch up with you, mate. Dan Morris there of BNP Paribas this market. And Dan is acknowledging something really important, Tom, and this is not a judgment of mine, it's an observation about what the market cares about right now. A month or so ago, we talked about reopening. The primary focus would not have been the data. It would have been the wave of infections that we might get as we reopen. And right now, as Dan pointed out, there is almost a consensus. The bar now for another lockdown is substantially higher now than where it was several months ago. And for that reason, many market participants are focused less on the increase in infections, which, to be clear, we're starting to see in some states in America, and much more so on the sequential month-on-month improvement that we could get now and in the months ahead.
There's no question about that. And of course, the hurdle right there is different and difficult. Businesses like airlines, just as one example. But John, what I find so extraordinary here is, as Mr. Morris mentioned, the dislocation from earnings. We all know that. There's no question that's apparent, and the market just completely ignores that chart.
Do you think the Fed job this week, Tom, is a little bit easier or a lot more complex after that single data point on Friday?
The Fed? No, I think their job is much, much, much easier. I think that the work on that jobs report was great. Lisa mentioned earlier, add 3 percentage points in. It's still a grim report. No, not at all. I think the Fed's got a much easier job on Wednesday.
Chairman Powell in focus this Wednesday. Full coverage, of course. Every single meeting right here on Bloomberg TV and on Bloomberg Radio. For our audience worldwide from New York City, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramett, getting you prepared for the market open 1 hour and around about 20 minutes away, with futures adding some weight to the rally of the last 3 weeks. The S&P 500 up by 16 points. We advance a 0.5%. Outside of equities in the bond market, the theme continues. Treasury softer, yields higher, up by a basis point on a 10-year to 0.9%. On a 30-year, steeper curve here, anchored at the front end, up 2 basis points at the long end to 169. From New York, this is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
All right, good morning, Tom, and thank you. A number of top former military leaders have denounced President Trump's threat to use active U.S. military to quell protests across the country. On CNN's State of the Union, former Joint Chief of Staff Chairman Colin Powell, who was a retired general who served under President George W. Bush, blasted President Trump.
We have a Constitution, and we have to follow that Constitution. And the president's drifted away from it. I'm so proud of what these generals and admirals have done and others have done.
And retired General Mark Milley tells ABC's This Week the threat of that is troubling.
For me, it was a can and should dichotomy. And I thought that given the state of the unrest and the risk that we would put the active duty military in a position where its relationship with the American people would be adversely affected, that I should say something.
Milley says he does not dispute President Trump's authority to make that decision, but he does think it is unwise. Most Americans are concerned about the spread of the coronavirus, pessimistic about the economy returning to normal this year, and they don't believe President Trump can unite the country. 63% are worried that they or someone in their family could catch COVID-19. This NBC Wall Street Journal poll shows 8 in 10 U.S. voters believe things are, quote, out of control. Now, nationally, Democratic nominee Joe Biden is ahead of President Trump by 7 points, which is actually unchanged since April. This poll was taken before the jobs numbers that were released last week. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone.
If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize-change.
Influential conversation.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
I didn't know about the Get Congress Fast part. We have taken some time off from legislation. Even though we're talking to both parties, we will come back, I reckon, after July 4th, and we'll have a good discussion.
Larry Kudlow, National Economic Council Director, speaking to us right here on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramett. This is Bloomberg Surveillance. Tom, it is the big conundrum for many people. We see it littered throughout history. Every single chapter, whenever there is a crisis, when it begins to fade, the collective will starts to fade with it. Is that what we're seeing play out in Washington? Or will we get a positive surprise, an upside surprise, in the months to come? I think we have a connection problem. At least I can't hear Tom Keene. I'm going to get you some price action. In your equity market, we advanced 17 points on the S&P 500. We are positive a half of 1%. That's the price action in equities. Let's get to the bond market for you. Treasuries set up as follows. 10-year yields higher over the last several weeks or so. Up a single basis point right now to 0.9%. And in foreign exchange, a euro that is slightly negative. Euro pretty much unchanged now. Euro dollar flat after several weeks of rallying. We can head down to Washington, D.C. now and catch up with Kevin Cirilli. Kevin, it was the moment Friday which got a lot of people's attention in this market when they talked about the next stimulus effort. As we wake up this Monday morning, on that specifically, where is the collective will at the moment to do more in the months to come?
I'm hearing from a Republican lawmaker at the end of last week, Jonathan, that sometime between July 23rd and the first week of August, before lawmakers go on their August recess, that's when potentially you could see another congressional vehicle make its way with bipartisan support. But I think you touched on something really, really important, which is that as states have begun to reopen, particularly Republican states, there is less now incentive for some type of massive overhaul in terms of another economic stimulus. They want to see open guidelines. Now, Senate Majority Leader Mitch McConnell, he wants to make sure that should businesses reopen, that they're not going to be on the hook, legally speaking, for there to be legal questions or legal lawsuits for individuals who might contract COVID-19. So there's that element of this. And then, of course, additional funds for businesses who are going to have to, mark the elevators, mark the floors. Today's my first day back in the Bloomberg Bureau, and I can tell you the entire building has been remade to adopt to social distancing norms.
Kevin, I'd ask if the Gucci stores are open across the street, but I guess I don't want to go there. What I'd say, Kevin, is what is so important here, and you bring it up, is the great bargaining chip, Kevin, of liability of businesses over let's go. Isn't that what this is going to be? $1 trillion here to protect businesses down the road? I mean, is it that simple?
There's that issue, absolutely, and Leader McConnell, and he would point to all of the conservative judges that have been appointed during the president's first few years in office. But then there's this other issue collectively of reopening and allowing for there to be, again, some type of new normal that is adopted. But I think if you look at the jobs numbers on Friday, Republicans are feeling bolstered by that. They feel more energetic, but Democrats are saying, hey, not so fast. There's a lot of questions here, and there is some more aid that's needed.
I'm wondering, Kevin, about the unemployment benefits, which are set to run out here at the end of next month. A lot of people saying that this has propped up a lot of individuals, especially on the lower income side of things. How much Republican willingness is there to extend these benefits, given the fact that we are starting this reopening, and they've heard from employers that are saying, we can't compete with what you're offering to pay our people, and if you don't end these, it's going to make our job harder?
Zip, zero, nada. There's no appetite at all, Lisa. And when I talk to Republicans, they're saying they want to make sure that there's an incentive and that individuals are able to get back to work once states reopen. And so, and in fact, when you talk to folks at the Labor Department, they point to that as well. If something is reopening, folks have to get back to work. That's the argument that we're hearing from the Labor Department. But that tension of safety versus the economy on full display, and unfortunately on full display for underserved communities.
Hey, Kevin, great to catch up with you, sir. Kevin Cerruti down in Washington on some really important issues. Let's pick up on what you just mentioned, Lisa, on the enhanced unemployment benefits. The good news in the payrolls report on Friday is that it doesn't seem that those enhanced unemployment benefits discouraged a return to work. There was a lot of conversations about that. A huge issue potentially that some people would hold back, wouldn't go back to work because of the enhanced unemployment benefits that they were receiving. I would say that payrolls report on Friday eats into that argument just a little bit, and that was something Larry Kudlow had to acknowledge himself on Friday. As they adapt this, do they extend or enhance? And I think listening to them at the moment, listening to the administration, the bias is towards enhancing the unemployment benefits. And what I mean is just adapt them a little bit instead of just extending them, Lisa, and maybe providing some incentive for a return to work. I think that's what the administration wants to see. And when they talk about pro-growth, we're talking about supply-side efforts, not necessarily a support to consumption that we saw over the last couple of months. And this is something we've been touching on over the last several weeks. As you go from a shutdown to reopening, how does the nature of the policy effort shift? And I think we're getting some subtle hints in the last week on how they might go about doing that.
Yeah, and some of the sort of details as I was reading about it over the weekend include how do you supplement people's income? Let's say if an employer needs to hire people back, but not on a full-time basis, how do you fill out their salaries so that they can continue to receive their income and they're not penalized for going back to work part-time? That's one of the proposals. But John, you raise an excellent point, the idea that the preliminary data does not seem to suggest that the enhanced unemployment benefits is preventing people from going back to work. And I will just add add to that, John, that if you look at the savings rate, it has been increasing. People are not spending everything that they're bringing in because they are preparing to not necessarily have a job later to go back to. People are aware that this is temporary and they are preparing as such. So as people look at policy, to Kevin's point, it doesn't seem like there's a lot of willingness to end this at this point.
You know, so many people say it's just one data point. It's just one data point. Many people were saying ahead of the payrolls report on Friday, Tom, ignore it. It won't tell you anything. How that conversation shifted in the seconds after we got that huge upside surprise. And I want to go to something that we mentioned at the top of this hour. Do we need the data this week to confirm the optimism that jobs print on Friday poured fuel into? Do we need to see that in continuing claims this week just roll over to validate what we got on Friday?
Yeah, I'll go to continuing claims there as being important in the weekly data, the 4-week moving average of jobless claims and such. But John, I want to make clear, if you knew nothing about this pandemic and you saw the Q4 estimates of where this economy is and where this job economy is, you'd think it was a depression. I mean, where we're going is still pretty grim. And I just can't believe into an election that both parties can ignore that. And I would suggest Lawrence Kudlow and the president understand that, and Mr. Mnuchin a lot better than Senate conservatives.
It's a valid point, Tom, and I think the administration does get it from the conversations I have with them on a monthly basis. For this market, if you went to sleep at the start of the year, in fact, maybe in the middle of February with a nice 60-40 portfolio and sat out the last 3 months and woke up this morning, you'd wonder what happened. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramage. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A squirt for you, a squeeze for me, a splodge for the kids, and that makes 3. A splat coming in, a splot going out. A safe pair of hands is what it's about. A squirt for you. When you're out and about, keep Carex antibacterial hand sanitizer on hand. With 70% alcohol to kill viruses and 99.99% of bacteria, every squirt means you're in safe hands, helping to keep you safe and protected. That's why we Carex. Always read the label and use sanitizer safely. Find out more at carex.co.uk.
Hi, this is Mike Tirico, introducing you to Sports Uncovered, the newest podcast series from the storytellers at NBC Sports that will shine a fresh light on the most unforgettable moments in sport.
The reason why I'm smiling, I might get in trouble for this.
Search Sports Uncovered to start listening today.
Ready for some straight talk on what's happening in the MLB? On the Barstool Sports Podcast starting 9, Dallas Braden and Jared Carabas cut through the BS to break down the league the way they really see it.
Yeah, we're continuing our little mini-series of college baseball coaches in addition to bringing you major league players from throughout the league. If you've been listening to Starting 9 for some time now, you know that we've had a big leaguer on every single episode for probably 2 years now.
Search Starting 9 on TuneIn to listen.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz. 1 hour away from the opening bell in New York. 3 weeks of gains on the S&P 500, and we advance once again this Monday morning. We are positive 22 points on the S&P 500. We advance 0.7% through 3,200. What a turnaround over the last couple of months. What a repricing of equities in the bond market too. Yields higher, the curve steeper, up by 3 basis points on a 30-year, up by a single basis point elsewhere on a 10-year yield this morning, 0.91%. In foreign exchange, a ton of dollar weakness against that euro strength over the last month or so. We take a pause. Euro dollar unchanged, but the dollar weaker elsewhere against the Norwegian kroner and the Swedish currency as well, Tom, and the Aussie dollar in the mix too. As we reopen this morning in New York, phase 1, Tom, phase 1 in New York City, the long road ahead to normalize and slowly get the rest of this economy open. How quickly can we normalize? Still a huge question for most people.
Now, to me, in this city, at least, it really starts with retail and with the restaurants as well. It's going to be interesting, John, to see what phase 2 and phase 3 is. Of course, for me, with yields higher, phase 4 or 5 has to be the clarion call I heard this weekend is when do we get the real yield back with John Farrell? You know, we're doing this simulcast, we're on radio and TV, and that's great. But people are begging, John, I say begging for the real yield to come back. And it really speaks to the yield environment we're in. I mean, one of the outcomes here has been higher interest rates. That's been a huge surprise.
So, Tom, I can say up front that I don't have any news on that. And if you want to find out, then please get in touch with my manager. I'd like to think that people have bigger priorities, though. It's nice of you to say so, Tom. I do think you're on the right point, though, and that's treasuries. Yields higher, much higher. The curve steeper as well over the last several weeks. How comfortable will the Fed be with what they're seeing? Because for many people, we were talking about this yield curve control story, the next phase of Federal Reserve support, and whether that would just cap yields at the front end. The bolder thing to do, the scope for surprise is whether they look at doing something around the longer end. That is certainly not the base case, certainly not the consensus view, but I just wonder how comfortable they are with the retracement we've seen at the longer end of the curve.
Let me give you a window into this, and it works on radio and TV because, of course, it's about charts. John, the street looks at yield on an arithmetic basis, a normal chart. Economists usually look at yield on a log basis. And when you do that, what the Fed is going to see is yields plunge down. But even with this move back to higher yields, yields are at best in many different looks, barely back to trend. So it's in no way on a log basis a yield breakout for Chairman Powell and, frankly, the people around him, the fancy PhDs around him.
Tom, I take your point, and it's a point really well made. I guess the easier, more digestible way of explaining what you just said is on a historical basis, yields are still incredibly low, and they are still incredibly low, though they are also very sensitive to what happens in markets, Tom, and the repricing of them. We've had a lot of supply come in from the Treasury. It's unsaid. They don't talk about it. Most people assume that central banks worldwide right now want to accommodate their government's ability to come into this market and issue more debt to support this economy. I think it's going to be a big focus for the weeks to come, the months to come too.
It's a big focus, but again, we celebrate in New York City this reopening today. Right now, joining us here on our simulcast on Bloomberg Radio and Bloomberg Television is Thomas Kosturg. He's with Pictet Wealth Management in Europe, and he does something very different. He writes very, very thoughtful reports for people with real money at risk in Europe. And that, of course, redounds right over to the United States as well. Thomas, what are you hearing from the clients of Pictet? They are seeing disinflation. They're seeing, in some cases, outright deflation. They are living negative rates. What are they telling to you?
Well, I think the big anxiety, around here is about, policy actions, including the fiscal side and the monetary policy side. I mean, we've seen gigantic fiscal policy boosts in the U.S. especially, but also now increasingly in Europe. And the question is, who is going to pay for that? On the monetary policy side, I mean, also we've seen actions that are now dwarfing what happened during the global financial crisis. You see the Federal Reserve buying corporate bonds. So the balance sheet is ballooned to more than $7 trillion. So that's really unprecedented. And I think our job is also to keep things into perspective. Our message is that disinflation more than hyperinflation is the real threat. Although we see growth remaining rather soft, so we do not see a V-shaped recovery out of this coronavirus shock. We see more of an asymmetric view, if you will. But definitely, the policy action has been really massive, both on the fiscal side and the monetary side.
But Thomas, we're just starting to see yields drift higher. How comfortable do you think the Fed will be with that repricing as they consider the next phase of their forward guidance?
Yeah, I think it's quite interesting, but the Fed is looking at financial conditions in general, and financial conditions are very loose. Corporate spreads are down. Debt issuance is booming, both at the private level and at the federal level. The dollar is also sliding, so yes, you have a slight pickup in yields. I think, again, we have to take the historical perspective. We're still below 1% on the 10-year yield, so still very low, but I think overall financial conditions remain very loose. So I think the Fed will be happy with that. I think they want to keep financial conditions very loose. Some will say actually too loose, but that's another question. But probably there's a mini test of the Fed QE program. We know that the Fed QE has been slowing, so they've been buying less treasuries over the past few weeks. So probably the market is getting a bit impatient about that. It would like to see what the Fed is, whether the Fed could twist a bit the purchases and reaccelerate that. I think it's a fair test in my opinion. But I don't think the Fed will overreact. The Fed will continue to say that the recovery will be slow and therefore that ample accommodation is needed. And yes, they're studying yield curve control or yield curve caps. But I think it's more something for the second half of the year. Right now, they're busy deploying the existing measures, including the Main Street lending program. That could take some time. But overall, I don't think they will panic because the 10-year yield is going up. And then again, it's not going up by much, and it's going up in an environment of very loose financial conditions, and they're very happy with that.
They're not going to be worried yet. There is a question at a certain point, though. The U.S. cannot sustain higher yields based on how much debt it's incurring. Frankly, globally, given the amount of debt that countries are borrowing globally, no one can sustain a material increase in borrowing costs. How big can the Federal Reserve's balance sheet get before it gets to be a political liability? We're hearing $12 trillion by mid next year as a likely target. How big can it get?
Yeah, and maybe let's recap about QE Infinity. The problem with QE Infinity, it's a vague promise to buy bonds. But actually, I think some analysts would like to see some more concrete numbers. And I think there'll be, the Fed is going to be asked about concrete numbers. People would like to see, how much exactly you're going to buy on a weekly basis going forward until the end of the year. I think that's more concrete than just saying QE Infinity. But QE Infinity, actually what you're doing, you're actually slowing the purchases. So yeah, there's this problem of communication with QE Infinity, if you will. Point number one. Point number two, yes, the U.S. and the U.S. cannot sustain much higher interest rates, and that's why I think first they would like to potentially cap interest rates. And point number two, well, they're going to be able, they are able to buy, much more bond than they're doing right now. I think, $10 trillion balance sheet is not unthinkable, and the Fed can do it. I think what we've seen over the past few weeks is that the Fed is actually the market itself is quite okay with a rising balance sheet and the Fed absorbing most of the issuance. So de facto, even though there's no, the Fed is not directly buying from the government, but it's buying such huge quantities that you could argue that actually it is kind of doing some deficit financing already. But the market is fine with it.
The market seems to be fine with a lot at the moment. Thomas, always great to catch up with you. Thomas Kostek there from Pictet Wealth Management. Lisa, let's build on that. I think for me, if a central bank has credibility, they don't actually have to do a lot at all. The central bank we're talking about right now, the Federal Reserve, actually lost some credibility going into this huge drawdown in March and had to buy it back aggressively by doing a huge expansion of the balance sheet. From where I'm sitting now, as I look at programs that have come from the ECB and the Federal Reserve over the last 10 years, some of the most effective ones are their ability to do a hell of a lot without doing much at all. The so-called announcement effect. We saw that from the Fed with its credit programs, credit tightening aggressively before they had to buy a single bond. Still haven't. The primary facility still isn't up and running. We saw that with the ECB almost a decade ago as well. And I think for me, if they go forward with yield curve control, so long as the Fed has credibility, they won't actually have to buy that many treasuries to cap short-term yields. That's what's going to be critical here, Lisa. Hi. And that will limit the expansion of the balance sheet over the short to medium term.
I agree with you, and I think that is the hope, right? That their signaling will overwhelm their actually having to go out and do it. However, John, there is this supply-demand dynamic that we're seeing increasingly coming to the fore. The U.S. is selling an increasing amount of longer-dated bonds at a time when foreign investors have pulled back. The net buying has come from the Federal Reserve. They are the swing factor here. Otherwise, there isn't the same sort of demand that there has been in the past to soak up all of this Treasury issuance. So, John, to your point, yes, this is absolutely the case that signaling is very important, but at a certain point, the supply of demand dynamic will overwhelm that. And that, I think, is the concern of a lot of people in the Treasury market.
Yeah, and I would agree with you to an extent. Let's separate what happens at the front end and what happens at the longer end, where they have less control. And I think that's what's going to be interesting about how they announce yield curve control. If they do go in that direction, perhaps this week or in the months to come, is it focused on the short end, or do they try to cap what happens at the long end as well? Tom Keene, just to bring Credit Suisse into the conversation, Jonathan Golub just publishing, and I think it summarizes what we've been talking about through the morning quite well. Over the near term, sequentially improving data will warm investors' hearts. Over the intermediate term, by contrast, focus will shift to how long it will take to regain pre-crisis business and employment levels. This is a question for another day. Right now, this market focused on the former and not the latter.
Yeah, I'll go with that. You can regress it out. I mean, from Dow 18,000 up to 27,000, and you wonder forward after making all that distance. But I'll tell you, John, and this goes to John Golub with his great sector analysis. It's where to be, and just as much with this huge move where not to be right now. That's going to be a tough decision for every participant.
This equity market improves, Tom Keene. As we count you down to the opening bell, we advance 20 points on the S&P 500, up 0.6%. From New York on Bloomberg TV and radio, this is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. New York City, considered the epicenter of the coronavirus outbreak in the U.S., is set to begin phase 1 reopening today after 3 months of closures. A limited range of businesses, construction, manufacturing, wholesalers, and previously non-essential retailers can resume work today with restrictions. And as many as 400,000 New Yorkers could board buses and subways to get back to work today. That has the MTA increasing its schedule by reversing cuts put in place at the start of the pandemic. Social distancing markers have been placed on the platforms. Hand sanitizing stations are being scattered throughout the system. Members of the Minneapolis City Council have announced their intent to disband that city's police department. Now, Minneapolis Mayor Jacob Frey has said he doesn't believe in abolishing the city's police force, but he says he will look at changing the force and will work with council members.
We're coming to a reckoning right now, a reckoning of our words from the past with our actions that need to take place now and into the future.
And we are watching Congress for a broad police reform bill expected to be released later today as lawmakers look to turn the energy of the nationwide Black Lives Matter protests into concrete legal changes that could make it easier to prosecute police misconduct. A draft version of the Justice in Policing Act curtails qualified immunity for police and would allow for more civil lawsuits. That is to be introduced today. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. The COVID-19 pandemic has people using their homes a little differently these days.
One of the things that we're going to see come out of this is going to be a rethinking of what it means to have a second home.
Jonathan Miller is president of appraiser Miller Samuel.
Perhaps everybody that would have a second home, they might end up having what I would call a co-primary residence, which would mean that they could live in either location for as long as they wanted to, that it wasn't, sort of a weekend getaway or a summer getaway, but it was equal with what was their primary residence.
And Miller says as social distancing and work from home continue to unfold, instead of people in cities moving up to those larger urban homes, a growing number of buyers may purchase what he calls those second primary homes in the burbs or in country home spots instead. He says he's already seeing an uptick in this kind of interest. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Connecting decision makers to a network.
Where will 2020 take you? Somewhere where people care. About each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night, and there's going to be 1 team hold up the trophy.
To the 5! Touchdown! Search Classic Game Replays to listen for free.
There's still the case here that we have had some permanent losses of employers, some permanent losses that are not going to come back, and that will be a little bit of a darker cloud.
Jeff Rosenberg of BlackRock on the limits of this recovery. Lisa Abramowitz touching on the permanency of some of these job losses. I'm sure that will be something we explore in the week to come. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance, live on Bloomberg TV and radio, getting you set up for the opening bell. That's in about 42 minutes' time. Equity futures just off session highs, up 20 points to the S&P 500. We advanced by 0.6% on the Fed and on the question as to whether the data this week will validate the improvement that we got in the payrolls report last Friday. A little bit later this morning, Tom, I'll be catching up with Mike Schumacher in Wells Fargo as we come out the opening bell a little bit later this morning.
Well, it'll be interesting to see. And again, some of the mysteries set up here, folks, off that jobs report can be addressed by Mr. Schumacher and others as everybody recalibrates and adjusts. And maybe my major message, folks, through this morning of Bloomberg Surveillance is just simply the mystery forward, not so much to the end of this week, but the mystery to get out to late August and early September. I saw a lot of tentative writing this weekend. One of the great things that is true is we take it for granted. And what we take for granted is very simply the getting around of New York. It can be 70,000 plus people. It can be by any means of conveyance, but it looks a lot easier than it actually is. Patrick Foy is with us on this day of reopening for New York City. We welcome him across this nation and to our worldwide audience. He has a small job as Chief Executive Officer of the MTA, the Metropolitan Transit Authority. Patrick, congratulations on getting to this point in this pandemic. It has been an extraordinary effort. Give us an update on the last 2 months. What surprised you about what needed to be done in this city for the MTA?
Well, first, thanks for having me. It's not a surprise, but I am awestruck and overwhelmed by the job that the MTA operating folks did. Subways, buses, Metro North, Long Island Railroad, bridges and tunnels. They were literally heroes moving heroes. The pandemic has obviously had, the epicenter has been New York City and the New York, New Jersey region. And the losses, whether fatalities, illnesses, economic damage, have been extensive. But the MTA workforce has done a tremendous job. The second thing that strikes me, obviously, is the precipitous decline in ridership, which paradoxically, in this context, is a good thing. It was New Yorkers responding to Governor Cuomo's directive and suggestions. Directive by executive order with the force of state law, but also his suggestions that the way to minimize the number of cases and fatalities in New York City and New York State was for people to stay home and not ride public transit, except for first responders and essential employees. And New Yorkers answered that call. Happily, today, we're restoring full service on the subway. Service is good this morning. Last week, we did a physical survey of about nearly 50,000 customers, and mask compliance, which is now a part of state law, was 92%. The most important thing that our customers, the most important thing our customers can do is to wear masks to protect themselves and their co-commuters and our employees. And that 92% is an impressively high number and one we want to drive higher.
How are you going to police usage of masks? I'm on a train, I'm on a bus, and there's that one idiot, those two idiots without a mask. How do you police that?
So here's an answer to that question. First, we're starting from a good place, which is 92% compliance. I spent 40 minutes in Grand Central Terminal this morning, and frankly, the customer compliance looked higher than that. What the MTA is doing this morning in subway stations throughout the entire system is distributing this week 2 million masks. We got 1 million masks donated by the state and the city each. We've got MTA employees and volunteers from both the state and the city and the MTA helping distribute those masks. So the most important action that can be taken by our customers is wearing masks. 92% is a pretty good start. We're going to monitor it and report it going forward. On top of that, we are disinfecting every subway car, every bus, every Metro North and Long Island Railroad commuter rail at least once a day. And in the case of subways and buses and commuter rails, multiple times a day. We're disinfecting our stations, all of them, at least twice a day. We announced a couple of weeks ago the great news that ultraviolet C light, according to research by Dr. David Brenner at Columbia University, kills the COVID-19 virus. And we're piloting that right this week, last week, this week, and next week on subways and buses. We'll roll it out to Metro North and Long Island Railroad. Beyond that, we're also looking at antimicrobials, which promise to have the ability to eradicate the COVID-19 virus, but also to do that in months after application.
Mr. Foy, let me bring in my colleague, Lisa Abramowitz. Lisa?
Well, no, Chair, one thing that I'm struggling to understand is how quickly ridership has to get back up to near where it was in the past in order for the MTA to remain solvent without federal government help or additional borrowing, perhaps, through the Fed's new facility.
So, Lisa, great question. Obviously, in the CARES Act, the MTA received over $3.8 billion. The HEROES Act, which was passed by Speaker Pelosi, and both of those we owe great thanks and have to acknowledge the work that Senator Schumer and the New York congressional delegation did on a bipartisan basis. Like every transit agency in the country and around the world, ridership has declined precipitously. That's the flip side, obviously, of New Yorkers responding to Governor Cuomo's directive and request that people stay home. Today is an important day, phase one of the recovery of New York. We expect, and anecdotally, first of all, we're providing really solid, reliable subway and bus service this morning. There have been no delays reported. We see mass compliance at a very high level, and we believe that ridership is headed higher. Obviously, we are in the phase one significantly below the ridership in pre-pandemic days. We and every other transit agency are going to require federal aid to get us through 2020. About half of our revenue is based on fares and tolls. The other half is on a package of dedicated taxes and subsidies, which are economically sensitive or transaction based. The Fed's action last week on the municipal liquidity facility is important. Governor Cuomo has dedicated named the MTA as one of the revenue bond issuers in the state of New York that is eligible for MFL applications.
Thank you so much, Patrick Foy, the chair and CEO of the MTA. We really appreciate your being with us, and we hope that you come back in order to provide us with an update as to how the reopening does go. Coming up at 1 p.m. Wall Street time, don't miss this. David Rubenstein in his Leadership Live series speaks to GM Chair and CEO Mary Barra about the road ahead for the auto industry. This is Bloomberg Surveillance. I'm Lisa Abramowitz alongside Tom Keene, driving the conversation forward. This is Bloomberg Television and Radio.
Hey, y'all. This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Dear Dad, happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years. Hang on, kiddo. I'll listen in a sec. I miss you. See you soon. Love you lots, Luce. This Father's Day, send love straight to Dad's door with moonpig.com. Download the app today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 ball games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.